So first of all, we are recording today. This is day 2 of the Algo Week Bootcamp. And ultimately, just to kind of clarify, for those of you that were not here yesterday, we covered a lot of valuable topics on this document. So we're going to be sending out a recording today for the entire bootcamp for yesterday and today. And you're going to watch it and you're going to be able to get a little bit of context from yesterday's event. We covered on what algo trading is, effort versus action versus expectations. We talked about testing and optimization. We also discussed all of the current algos that we have in production. And then we went into a lot of system settings and tests on the trend stepper and the VWAPer, right? And then we talked a little bit about community policies. We talked a bit about, expectations in terms of use and just what will and will not be accepted and et cetera, in terms of positive attitude versus negative attitudes. And we just talked about a whole whackload of stuff, guys. Like, it was just a great event. So we're going to send that recording out along with today's recording after this presentation. Okay, so for anybody in here that's new, welcome. If you didn't get a chance to come here yesterday, welcome. Today's going to be a fantastic day. And we're going to go over Q&A. We're going to ask questions. If you do type stuff in the chat box, I do see it, but I can't always respond right away. And I will go back. And if I miss something, I'll go back later. Don't get offended. It's a big topic. So we got a lot to cover today. And yeah, we really just want to make sure we can help be of value. Today, what we're going to do is we're going to cover the VD algo and the hybrid. How many of you guys are excited about those two topics, the VD algo and the hybrid algo? I know I am. I know a lot of people are. I got a lot of great feedback, education, insight, a lot of eye-opening stuff that many of you may or may not know about these algos, and we're gonna go through them together. And the only reason we're not doing the Delta algo in the bootcamp is just due to the fact is that we haven't updated the core engine on it yet. And we will be doing that, but I can assure you we've got a lot of training on it, and we've got that in the algo course. And I can assure you that it's not that we didn't want to talk about it. We'll do other training on the on order flow and stuff at another time. Okay. And so how many of you guys in here are new to algos? Can you guys just type a yes if you're new to algo trading, automated systems? Okay. How many of you guys feel, just type a need, type NEED if you know you need help. Like, I think that's, I know yesterday we asked the question, how many just didn't even understand the core engine? And we were blown away by that. So Jeff, I think what's needed, and I'm going to bring this up again. We did a survey yesterday, and we went through the core engine of all the algos because they're all the same. The core engine is the core engine, and we realized that so many people just don't even understand all of the foundation of all of the algos. Never mind the different signals and what each algo is doing, but how to set up your trade management, how to set up your money management, how to set up your time filters and your trend filters. And I just felt that there was just such a huge gap between everybody buying the tools and not really understanding the foundation of what's holding the house up, right? So today what I'm going to do is I'm not going to talk so much on the engine. Jeff and Jim are going to put together a webinar, a bootcamp webinar on engine training. So maybe Jim and Jeff, you guys can put that on the roster for just a simple workshop for all algo traders, and just walk through every component of the engine. Okay. And then today what we're going to do is we're going to talk about two algos, the VD algo and the hybrid, and we're going to talk about testing. And we're going to talk about some concepts that I don't think anybody else knows about. We're going to learn about, Yanev wants to learn about optimization. So you know what? We're going to do an optimization today, and we're going to talk about that. Okay, we're going to walk you through my testing process and let me ask you this. Which algo would you like me to talk about first? Would you like me to talk about the VD algo or the hybrid? I'm going to put it in the hands of you guys, and you guys tell me. VD. A lot of people want the VD. I think VD is the name of the game. Excellent. We'll go into hybrid second. Okay, which is great because my optimization example was going to be on the hybrid, and we're going to talk about the VD out. Okay, so let's go in and talk a little bit about. 1 second here. Wrong file. There we go. So volume divergence, that's what VD stands for. Okay. And my thoughts on this, the VD algo is a scalping algo. It can be used as a day trading algo, but I feel it's more of a scalping algo. But then again, a lot of traders would say, you know, some people would say 4 ticks is a scalp. I know people that say 20 ticks is a scalp. So it's really, I think jargon and terminology is really up to however you want to spin it, right? We're going to talk about volume divergence because I think this is where a lot of people don't even realize the potential of the system. They just, you know, buy the algo and they take the one template that we built and showed everybody how to use, and they just don't even understand how to actually use this algo and to extract profitable trading concepts from it. And I was able to prove that thesis very quickly. I've never even tested this algo on the NQ. I sold the algo. We relaunched it on the S&P, and everybody's using it on the S&P. But it's a momentum scalping volume algo. And so I think the biggest problem is that everybody here just wants somebody to fish for them, but nobody wants to go and learn how to fish. Well, you're not going to be able to feed your family if you don't know how to fish. And this is what we talked about yesterday, is that if you just buy algos expecting that you're not going to expect to do anything at all, well, go back and watch yesterday's recording, please, because it's going to be a rude awakening for those of you that aren't accepting the process of what automated trading is. And volume divergence is the simplest system that I think we've ever built so far. Like, it's so simple, but I don't think anybody understands how powerful it can be if you just know how to set the testing up. And we're gonna show you. I'm gonna show you what I did to find a really, really, really good system template for the NQ. How many of you guys are excited about that? Because I know a lot of you guys trade the NQ, and I got a really good template on the NQ. Now, I'm not saying that this template's going to be good forever. Guys, that's not algo trading. I'm telling you that it's good right now, and it's been really good this month. And what I do every 2 weeks is I run new tests, because maybe the market conditions change. Maybe the volatility's changed. Maybe my trend algorithm for the EMA needs to be adjusted, or maybe momentum needs to be adjusted. But the cool part about volume divergence is it's so simple that a newborn could understand the setting. Like, it's that simple. And I think simplicity really can be powerful in algorithmic trading. And we'll get into that. Please type Y in the chat box that you agree that I'm not here to give you advice or guarantee anything. I need to know that you are all adults and you accept the risk disclaimer here, because I can't carry on without it. We'll touch base on this. We touched base on this yesterday. We'll touch base on it now, and we'll get into the meat here in a minute. But a lot of people don't understand what algo trading is doing for them. Your job is to program the computer. So if you're just thinking that you're going to basically turn it on and then just go and do whatever, or walk away, or just leave it and it never needs to be adapted, well, I'm here to tell you that that's not reality. Okay. And so what I'm going to do is explain that a lot of people go to algo trading because they just struggle with discretionary trading, which is in and of itself. I proved yesterday that 99% of all traders use algo trading because they get excited about the test results, because the test results, showing the equity curve, and I think it's really important to discuss this. Okay, when somebody sees that, okay, the first thing that goes on in their mind, okay, the first thing that goes on in their mind is what? What do you think goes on, guys? Like, this is so important for this type of a training period. What goes on in your mind when you see that? You're like, shit, I've never done that in a discretionary account ever. Finally, right? Ben's like, finally, like I, like, okay, what, you happy, right? Like you get excited, right? Like, right? So exactly, Lee. Oh my God, I'll be rich, right? Or, you know, you guys can choose to type to everybody, select everybody so everyone can read your replies. But it really goes down to this for me. It's not about how much money I can make moving forward. It gives me the confidence to say there's enough information here for me to want to deploy it in live markets. Now, how many of you guys, let me just go back and let's just take a look at this for a second. How many of you guys have ever logged 100 trades? We talked about this yesterday. Literally went back manually on a supply and demand indicator or a fib retracement or a divergence setup or anything and logged 100 trades in a trading journal and then sat down, looked at that equity curve and said, okay, now that's enough for me to want to go and trade it in real time. Very few. Some maybe. If you have, you're a rare breed. But the masses have never sat down and manually marked up their charts for 100 trades and then said, yep, that's enough for me to want to put this into motion and see how well I can do moving forward. So what happens with algo trading is they get super excited. I also get excited because it's enough for me to want to do something with a lot more confidence than, say, anything else. Because so many traders randomly just take a system or an indicator or a concept and just trade it, and they have no freaking clue whether or not there's any type of statistical edge to it. Does that make sense? So when we talk about algo trading allows you to have that information. It's not just about increasing efficiency and expectations on speed and accuracy and helping you improve your entries. And yes, that's all part of automation. But why would you want to automate it? Because it builds a stronger belief system in your ability to do something. How many of you guys can relate with that? Yes or no? Only Mary? Steve? Okay. So a lot of algo trading isn't just about using a computer to help you. It's about understanding why you use algos in the first place. Because everybody wants to have more confidence in their abilities to make money. End of story. There's no in between on that. Right? So I believe we have a much bigger advantage than any other algo developer in the industry, and I'll explain why. We built an engine. We built a core engine that's universal across all of our automated systems. So let me go in and explain what I mean by that. When I go in and I look at the engine of any system, what we did was we said, okay, let's build a testing foundation. And we're going to touch base on this because it's important. It applies to every discussion. You're going to set it up as a back test or an optimization. That's something that just has to be done in all systems. Then every system has a strategy parameters, whether it's the volume divergence, whether that's the trend stepper, whether that's the VWAPer, whether that's the wicker, whether that's order flow, whatever we build, you're going to have strategy parameters. That's the signal. Okay, that's the signal logic. But what we did was we said, okay, let's build an engine that allows everybody to build and test and automate their systems in a universal systematic way. So what we did was we created an entry section that allows for multiple quantity entries. That's your entries. Then we built a stop loss section, which allows for trailing stops, break-even stops, automated trigger stops. You know, you have the ability to control your trade management. Then we have the ability for targets. Well, with targets, depending on the type of system that you're running, you have the ability to take your stops and targets, and you can use ticks or ATR. You'd want to use a tick setting if you're using range or Renko charts. We touched base on this yesterday, and you can go back and watch the recording. And then if you're using targets, you can use a tick-based target, a risk-reward-based target, or an average to range-based target, which means you have the ability to control how you want your stops and your targets to be built and used. Then what we did was we built a time filter component, which allows you to be able to go in and control when you want to be taking trades and when you don't, right? Then what we did was we said, okay, we're going to add a money management section. A money management section allows, well, and that's a great example, John. John says, how are we supposed to know what bot to use and when? There's so many moving parts in listening. Yeah, absolutely. That's why we're doing a training session, John, on this. And were you here yesterday? Want to know, did you come? Perfect. So did you learn something yesterday? Perfect. That's how you start. You start by learning one thing at a time. You don't have to do everything in one day. Be patient with the process. I've been doing this 10 years. Okay. So money management is controlling the money. These are filters. Then you have trend filters. You have the ability to control time frame trend filters. Then you have momentum filters. Okay. Now, Jim and Jeff and our dev team are going to do just a training exercise on these parameters because it's a complete training exercise. And why is it a training exercise? Because every algo that we build and test and deploy, all of them have that built into that. This is the, look at this. This is the VD algo here. Okay. This is the wicker over here. The wicker has all of those same things in it. We have the strategy parameters, the entries, the stop losses. So what we're saying is that it doesn't matter which system you learn. So it's a great extension to John's question. How are you supposed to know what bot to use? Well, what have I told you? That your first job in algo training, okay? Your first job in all of the algos isn't to learn the algo. You say, what the fuck does that mean, Sean? Every algo is going to have strategy parameters, okay? You're going to have strategy parameters here. You're going to have strategy, like if you look at this, look at the strategy parameters for the VD algo, one setting. The strategy parameter for the wicker has all these settings. But your job isn't to learn that first. Your job isn't to understand how you're entering the trades. In algorithmic trading, that is like the last thing you need to know. You say, what do you mean? The entry is everything. No, the entry is not everything. The entry just gets you in based off of a rule set. If you don't know if you're going to go in with one target and stop, two targets and stops, three targets and stops, like if you don't know if you're going all in, all out, are you basically going to splice your exits? If you don't understand if you're going to set a stop loss based off ticks or off volatility, are you going to use a break-even stop or a trailing stop? Like these are things that you need to understand about building and running automated systems. Are you going to have multiple targets or are you going to have one target? Are you going to set your automated system up to trade in the morning, all day, all night? Are you going to execute using a money management filter? Meaning, are you going to have daily loss limits and daily targets? Because none of that has to do with your entry. All of that has to do with your understanding of quant trading. And 90% of people that buy an algo don't understand that. So my job is, I don't need to be your friend. I need to be that coach that tells you what you need to know, not what you want to know. Most people don't want to learn everything because most people get a bit lazy. It's like going to the gym. I want six-pack abs in 6 days or less. Holy shit. They're saying that while they're eating a Big Mac. My job is to help you understand that the last thing you should be focusing on is how am I getting into the trade? You need to understand how to set your computer up and understand that because it never changes. So if you buy 5 algos from us or 10 algos from us or 1 algo from us, you still need to understand how to control your computer. Do you want to have a trend filter? Do you want to trade with the trend and with momentum or not? It's a good question. Did you even know that you can put those filters on with your systems and block losing trades and use it as an advantage? Reversal strategies wouldn't use this because momentum's always against reversal strategies. Trend systems will use this very heavily. Good to know, right? Good information. So the first thing you want to do, okay, and this is training numero uno. John, did you miss the discussion yesterday on Renkos and backtesting? You said you were there. Were you there for that? We touched base on all that yesterday. That's okay, brother. You're learning. Let me just touch base on this first. So number one, your first priority is to understand the core engine. All settings, all parameters, what they do, what they can help you do. That's trade management, money management, filters, time, etc. Right? Stops and targets, etc., etc., etc. Okay. Then focus on the signal. Because the signal is easy. It's like that's the only thing that's changing between each system. It's a signal. It's a different system. It's a different entry signal. But the core engine, well, every system has a different default setting. That's the problem, is that you can't expect every signal and every system to be treated the same. Like this is where I think this is where the level of expectation and let's just kind of go back to, like, if you want to be a quant trader, then understand what's needed of you in this role. Effort versus action versus expectation, right? There's some work to be done. But if you learn it, it doesn't become work anymore. Like when you understand the engine and it's like the back of your hand, then you're like, holy shit, I can take any algo and turn it into a profitable system. You truly can, because once you know how to manipulate the settings and know what you're trying to do with it, if you come in and say, I want to do an all-in, all-out system with tight scalps, I know how to set that up quickly, because you could come in and you can just basically do one quantity entry and exit, stop losses tight, targets tight. I only want to trade the open. You can set that up quickly. Like these are things that you can do with any system. Okay. Now I want to touch base quickly on the Renkos real quickly again, because I know it's a lot. I get a lot of questions on this, and I just think it needs to be said again. You can go back and watch it. Okay, you can go back and watch it on the yesterday, but we'll touch base on this. Okay, so one thing that we did differently, and this was why we're a better solution for quant trading, is a lot of people understand that the job of a Renko is to make your charts look nice and smooth. Okay, so I'm going to just touch base on John's question again, and we'll just make sure that everybody understands this. You might be using ARC's Renko BXT. You might be using Ninja Renkos. You might be using Uni Renkos, whatever. You could build your own Renko. Renkos are just Renkos. All they are is a different bar type. But the problem with Renkos and automated systems is that you can have Renkos make your chart look nice and smooth, but price never actually traded where those bar types are. So let me give you an example. Okay, let me just draw a little line here. The way that NinjaTrader fills you on orders by their default mechanisms in the platform, let's say you had an entry signal. Let's say you had an entry signal supposed to fire off on that bar right there. Well, that's the close of that bar. Okay. But NinjaTrader doesn't fill you on the close, it fills you on the open. Well, based off of Renko, the open of that bar is down here because that's what the Renkos make your chart look like. Well, guess what that does? That skews all your back tests and gives you become a millionaire overnight because all your entries get positive slippage, right? But then what you do is people try to sell you back testable Renko bars where you can turn on the back testing feature and it shows you the true price action and all that fun stuff, which is not wrong. It's needed and it's expected. And for 99.9% of all automated systems built in the industry, you need a back testable Renko bar to be able to get valid back tests. But we're not 99.9% of all other development companies. What we did was we said, who cares about whatever Renko bar you're using? Who cares about your settings? We built our core engine to look inside of the candles by looking at this information only, and then saying, we look at where true price action is. So it doesn't matter if you're using a regular Renko, a custom Renko, a backtest Renko, our Renko, any other Renko, our core engine goes inside the true price data of price and looks at the true fills of where that system should have taken the trade. So what we say is, okay, if you're using a Renko and we know that you're supposed to execute here, instead of listening to what Ninja's design is on their platform, what we said was, we know the close of that bar is there. So we tell the engine to just draw an automated line across there, and we know that that's the true open. We do the work for you, so you don't need to go and try to figure out all of this other back testable stuff. Does that make sense? So you can set your Renkos up however you want, but our software is going to override everything that you're doing on a Renko. It's all inside of our algorithms, and that's done on purpose, so that you don't need to worry about using backtest Renkos versus non-backtest Renkos, because our automated systems are bypassing all of that. How many of you guys now understand that? John, does that answer your question? So we're just 10 steps ahead of everybody else. Okay, makes sense? So yes, you can use our algos on any bar type, and you're not going to worry about skewed backtest because our engine is going to overpower that. Okay. So let me get back into the presentation now, and let's just talk a little bit about the VD algo. So this is great concepts because our engine is a part of everything we just talked about. We have all of that inside going across every single algorithm. So let's talk about the VD algo. The VD algo is based on volume divergence. What is volume divergence? Right? Like, what is it really? Volume divergence first needs to have a candle of data. Okay, a candle of data. And inside a candle, there's going to be volume. Okay. And sometimes the volume will be inside the candle, right? Volume inside the candle. And what we're looking at is a number of ticks. So let me give you an example. If I have a candle and I set my volume cluster to equal 3 ticks, my volume cluster is going to be 3 ticks of volume. If I set my volume cluster to be 30 ticks, my volume cluster is going to be 30 ticks of volume. Does everybody understand that? You control the size of volume that you want to test inside the engine. So this is what most people don't understand about the volume divergence algorithm, is that it's all controlled by the size of your volume cluster. Now, volume divergence means that we want to see on reversal candles, when price closes here and closes up, we want to see volume stuck at the lows of those reversals. Because what that means is price is going this way and volume got stuck trying to go this way. It's called absorption. Does that make sense? It's when price and volume go in opposite directions. It's an anomaly in the market, and it usually leads to exploitable opportunities. Now, If you just have a volume cluster going everywhere under the sun, you're probably not going to make any money, because you usually want to be trading with the directional force of the market, since volume divergence is a concept of direction. Okay. And here's the kicker. If I'm using the S&P on a 5-tick bar, 10-tick reversal, and a 4-tick offset, and I set the volume cluster to say equal 3 ticks, that's a pretty significant amount of volume on a 5-tick, 10-tick bar, right? If I've got a 5-tick Renko going like this, and then I get a reversal bar that's 10 ticks, and I got the volume cluster up here, 3 ticks is 30% of that reversal. Does that make sense? You may yes, that this is starting to make sense to you. Did I lose you guys? Falling asleep? With me? Now let's say I set a 40-tick bar on the NASDAQ, and I use a 3-tick volume cluster. Do you really think 3 ticks is a significant amount of information on the NASDAQ on a 40-tick bar with an 80-tick reversal? Do you think 3 ticks is a powerful piece of information if I'm using an 80-tick reversal? What if you're trading crude oil with a 20-tick bar? You think 3 ticks is probably going to be the right way to use volume? No. Aha. Now you understand why we have the ability to control the size of volume, which is the entire backbone to the VD algo. So when people are like, well, the VD algo is not performing right now. Well, if you're not getting any movement in the market, it's not going to perform at all, because it needs movement. You need a directional market for the VD algo to work, because you need price to move and volume to diverge. So in choppy range-bound markets, good luck. Trending markets and market moving days, you're going to have really, really successful movement. Okay. And you could basically take the same system and apply it to a different market on a different bar type and get completely different results. And what's easy about this system is you can optimize for cluster size. That's exactly what I did on the NASDAQ, is I basically looked at converting the time frame. So what I did, and I'll just explain my process. Jim and I ran conversions on the NASDAQ. And what we did was we said, okay, we basically determined, and if you're wondering how I understand the volume size, I'll show you how we do this. This is a leveraged asset that you can thank us for, because we convert time to volume charts, and we convert time to range and Renko charts. I know that the MNQ and the NASDAQ moves 40 ticks per minute. So how the hell do you know that? I'm going to show you. We have a tool, a statistical tool. Okay. Take a look at the MNQ, or we can take the NQ. I'm going to turn this to minute days. I'm going to turn this to daily charts. 1,500 days. Holy shit, that's a lot of days. $1,500 days of data. I have an indicator. I built it for the purpose of this. It's called the fractal converter. And what we do with the fractal converter is we built a tool that converts time to volatility and time to volume. And what I'm going to do is I'm going to look over 500 trading days, and I'm going to convert a 1-minute chart, a 5-minute chart, and a 15-minute chart. Give it a second. It's going to do its magic. I know right now, every one of these blue lines is a day. Every one of these blue lines is a day. Some days I got high volume and volatility. Some days I got low, high, low, high, low. Why? Because the markets are not static. Every day the markets are changing. every day. Well, if you know that, if you have a high volatility day, you say, well, I need to adjust my time frames because the markets are moving again. Oh, and then the next day it drops down again. And you're like, well, fuck, that didn't work. Like the markets are moving really fast yesterday and now they're not moving today. And now I got the wrong bar size. So this is the problem. Most people don't even understand quant trading. They don't even realize that the time frames that you're trading your algorithms on are more important than the algorithm themselves. So what we always do is we start with determining your market, S&P, NASDAQ, crude, Apple, Google, whatever you want to trade. And then what we do is we go in and we say, we need to pick, are we trading on a time chart, a volume chart, a range chart, a Renko chart? You could take a system and it could be really, really profitable on a Renko, and you try to move it to a volume and you blow out your account. So one of the things that we do is we say, well, we can't be telling traders to change their time frames every day. So we built an algorithm that looks at the average and the sum of all averages. This red line that you see going through here, this median line that's going through, is essentially the fractal that you would want to use. And it doesn't change a lot, and it very seldomly changes. So what we've done here is we have two columns. We have a time column, and then we have a volume column and a range. Range can also be Renko. You can use range to determine your Renkos. And this is the current volatility or current volume per minute, and this is the current volatility per minute. Right now, the NASDAQ's moving 48 ticks a minute on average over the last 500 days of trading. Not 500 fiscal days, 500 trading days. That's 2 years of data. That's a lot of data, right? And so what I know is that I'm not going to just rely on that, because that could be just the one day. That could just be the one blue day. Instead, I take this average, I take this sum, which is the 40. And what that does is it takes an average of all of these days and all of the times, and it tells me that, you know, even though the current movement's fluctuating, my stable volatility setting is 40 ticks per minute. It's 87 ticks per 5 minutes. It's trading right now 1,000 contracts per minute, or 868 is more of the baseline. So round that up to 900. Does that make sense? So now I know that if I want to build systems using time, I can just choose time charts. But if I want to use volume or range or Renko, I can do that. Now, this takes a lot of freaking time to do this. So what we did as a company, once again, why we're who we are, is we built this document in Google to help everybody. And guess what? It's free. Here, take it. It's a view-only doc. It's in the chat box. Click on it. I just saved you guys a week of your life and time. Now you don't have to worry about your bar size settings. Does that make sense, guys? You're welcome. Okay, a valuable resource to be able to go and leverage. And Jim and I just updated these for our trading room. Okay. So how do I do this? Well, if I know that the NASDAQ is 40 ticks right now. Okay, if I know that the NASDAQ is 40 ticks, well, guess what? What does that mean? Well, I could do a 40 tick range bar. That would be the equivalent to a 1 minute chart. If I want to do a Renko, I can do a 40 tick Renko bar with an 80 tick reversal and maybe a 32 tick offset. That's a 2x reversal, and that's 80% of the bar size. That's what I normally do for standard charts. For the wicker, I might go 40 and then maybe, you know, times that by, put that up to 200. Or 400 if I want to, you know, these types of settings. I can do that, but I know what I'm working off of. I know that I'm able to do these things, right? And so these are things that you can do, and it is the current version. It says current right here. Yeah. I update these normally every 4 months. So you don't have to worry about that. Yeah, we don't change fractals very often. Okay. So back on track. Let's get back on track. I hope you guys understand now where we're going. Hope you're learning some valuable information today on this. Let's get into it. So essentially, what I did was I said, okay, well, now I'm going to build some templates for different markets. Now, we talked about the bar types, the Renkos, the logic. This is all inside of the Algo engine. It all goes into the bars and it looks at the fills. We also talked about the money management and the testing. So you have the ability to track your P&Ls and all of your money management filters. So if I'm looking at money management filters, I can go into, let's say, this engine here. I can go into an automated system here and I can go into the chart. Okay. And what this allows me to do is it allows me to essentially go in and look at, I can track the P&L on my algorithm. I can track the run up, the run down. I can set money management filters and block trades in here. So we built the ability to test and see this inside. Okay. And to do that. And that's all part of the engine. Okay. So when you look at, you know, the testing and the P&L logic, this is all part of the engine. Blocking filters, these types of things. The trade management, yeah, the data lag is a good question. It's a good question because sometimes, yeah, sometimes, well, this is on backtest mode, so it's not on real-time mode. The data lag is only meant for real-time charts. You would have that in real-time mode only because sometimes you have a data server or your data lag to your data provider is lagging. You might be trading fine on the NQ or the S&P, but then all of a sudden you have like a 4-minute lag on the NQ and you don't even know that. And then all of a sudden you're firing off trades in the wrong. It's just a nightmare, and it's not our fault. It's not your fault. It's the data servers. It's the connections, right? So we built a system tester in there to look inside that to tell you, hey, be careful. There's a lag on your data. Turn your algorithm off. Right, like that's it's very valuable to do that. I don't look for anything more than a couple seconds. These are in milliseconds. So when you look at this is a millisecond. So like, you know, like when you see over here, the left-hand decimal is 1 second. The right is millisecond. So if you've seen a 1 here, that's a 1 second lag. So normally if it's up to like a minute or something, like if I see like 60-second lag, I'm going to be very like cautious because it's not accurate. Yeah, it's not accurate. Okay. Now, trend and momentum filters, we'll talk about this when I talk about the VD Algo here. I have these in place for a reason. I don't have momentum, but I have trend. Some systems I'm going to use momentum. Some systems are going to use trend. Sometimes I'm going to use both. Sometimes I'm not going to use any. You would never use a momentum filter on a reversal because you're always going to have momentum going against you on a reversal. Okay. These types of things. So let's go in and talk a little bit about what I did for VD Algo. This test result, I'm testing the NQ, the MNQ. I'm using a 40 tick bar, an 80 tick reversal, and a 32 offset. How did I get that? From the fractal converter. Could I have used a 20 tick bar? Let's take a look at this. Let's just take a look at, let's just run them out. Let's just do this. Let's just say a 20 tick bar, 40 tick reversal, and what's 80% of 20? 16. So let's just do this, right? That's this would be a 1 stage down from the 40 tick setting. But if I go in here and I take a look at duplicating a new window and I just look at the different time frames for the VD Algo, I can come in here and I can set this to a 40. 80. And then 40 times 0.8 is 32. So that's the difference, right? And so which one's right or wrong? They're both right. They're both right. Why? Because the first thing you ever do is you start with your time frames. You do not start with your signal. That's just naive. So why would I start with my time frames? Because my time frames will dictate the size of the volume cluster that I'm going to want to use. Right? The time frames are going to dictate the size of the stop loss and the targets that I'm going to look to trade. Why would that matter? Well, first of all, if I know that I need volume divergence to happen on wicks, this is a 20 tick bar, 40 tick reversal, 16 tick offset. So the bar size is 40 ticks. Okay. So I'll give you an example. If I know that I need volume divergence to happen on the wicks, and I know that I need to have a volume divergence here, right? Well, if I'm going to build an algorithm on this and I'm going to optimize this, I'm going to walk you through this for a second. Okay, let's walk you through this for a second. I'm going to go and look at the size of those wicks, and I'm going to determine that I'm not going to get a volume cluster showing me divergence inside the bar, which means I know that I need to set my volume cluster to be within 3 ticks and 20, because maximum the volume cluster cannot be 20 ticks. It needs to be inside this candle. And by a bare minimum, it's a 3 tick volume cluster. So what I'm going to do is I'm going to test 3 all the way to 20 in increments of 1. I want as much accuracy on volume. It's the signal. So how do I do that? Let me show you how to do this. Another thing I'm going to decide is, am I scalping or am I going to trade this? Am I going to get in? Let's say there was a volume cluster right here. Okay. Let's say that there was a volume cluster. Let's just pretend that there's a volume cluster right here. And I'm on the right side of the EMA. Right. Let's just pretend that that's a signal. Okay. And if I'm going to go long, by definition, this candle needs to close for that to be a signal. So I'm going to get an opening fill on the open of X candle. Normally going to be 1 tick of slippage, unless you set your limit order entry. So where do I put my stop loss? We don't know that yet. That's the whole fun of algo trading. That's why you can let the testing and the optimization give you some type of a guide point. Is it perfect? No. Is it excellent? No. But is it better than just guessing? Absolutely. Like, why would you just say, well, I'm going to trade with a 10 tick stop? Why? Because somebody told you should trade with a 10 tick stop? No, like, let the algo tell you what's better or worse in the past. You have no evidence of the future because nobody does. Nobody's Houdini. Right? So if I'm going to determine the stop, what do you think is going to be a good stop loss? Well, if you know that the bar is 20 ticks, so that's 20 ticks from here to here, and you knew the reversal is 40, you could test. If you know that the full candle, it needs to reverse 40 ticks, a lot of people will put their stop below the low of that bar. Well, that's 42 ticks, because if you're entering with 1 tick of slippage and you're going to put your stop loss below that bar, that's a tick here and a tick there. That's 42 tick stop loss. Okay, that's one way of doing it. Do you need to put your stop below the bar? No. You could put your stop in the middle of the bar. Well, how do you know that? We don't. That's why NinjaTrader has an optimization setting. You could test, well, maybe I want to test 20 ticks to 42 ticks. Maybe I want to test 10 ticks to 42 ticks. You can do that. But what about targets now? Do I want to scalp? Maybe I want to go for 5 ticks. Okay. Maybe I want to go for 20 ticks. Okay. They're both right. If the system's allowing it, if the market's doing it, let the system show you. Does everybody, are you learning from this? Are you understanding like the mindset of a quant? Like, it's not about give me a template. Like, you can take whatever you want and build it, and it can be very profitable in the hands of 5 different people in 5 different ways. Nobody knows how to build it. Nobody knows how to test it. So everybody just relies on shit. So let's do this together. Let's run an optimization. I won't be able to download today's data because NinjaTrader and Kinetic servers do not allow us to download during intraday servers. You have to wait to the end of the day and the overnight to download data. So according to this, let's do strategy analyzer. I'm just trying to teach you how to do this, and this can be done on every system. I'm just trying to I like using a simple system to be able to show you how to do this, and then you can do it on the more complex systems with more settings. So what we're going to do is we're going to back test. We're going to run an optimization. Okay. And we're going to go in here. We're going to arc, and we're going to pick the VD algo. Okay. Don't worry, this is being recording. If you're missing something, no problem. Cool. I know that I'm going to run this on the 20, 40, 16 bar. Never tested this in my life. It could come back a complete awesome test, and we're like, holy shit, great. It could come back garbage, and we say, no, we're not going to test that. We're not going to use this bar size. We're not going to. Does that mean the system doesn't work? Absolutely not. It just means it's not working on these time frames, on these settings. This is the difference between experience and newbies. Okay. So first of all, I'm going to go down here and I'm going to go and set my time frames. I'm going to test it on the MNQ. We're going to test it on the Renko. And we're going to test it on the 20 tick bar, the 40 tick reversal, and the 18 tick offset. Does everybody understand that? And always make sure that this is unchecked. Do not check tick replay or you will not get it to work. Okay. Before you jump to questions, guys, let's build it together. We'll talk about stops and targets and all that stuff. Just let me teach you how to use the engine so that you understand how to set this up. Okay. Now, the next thing you want to do is you want to think about, okay, well, it could be 16. Let's take a look. It is 16. See, teamwork is dreamwork. Let's go to 16. Thank you, guys. I'm just making sure you're paying attention. 16. Since this is only one setting, we can just simplify it here. We know that the wicks are going to be, if the bar size is 40 reversal, 20 bar size, then that means that if this is going to reverse, it needs to reverse 40 plus 1 tick. So think about this. You can only have a 20 tick wick in this scenario. Okay. You could have a 6 tick wick, a 14 tick wick, a 19 tick wick, but you can't have more than a 20 tick wick based on this setting. So knowing that, I'm going to basically set my minimum to 3, my maximum to 20, and I'm going to go in increments of 1 because I want to be as thorough as possible with this setting. Now, here's my thoughts on stops and targets. You're only entering with one place, but you have the ability to do 3 exits. Well, what most people don't realize is that that's actually 3 different trades. Most people don't understand the stability of this, and they don't even realize that T1 is actually probability 1, T2 is actually probability 2, T3 is actually probability 3 in the eyes of statistical quant analysis. What does that mean? Well, they're actually 3 different trades. You might have a 60% win rate going to T1. You might have a 40% win rate going to T2, and you might have a 30% win rate going to T3. They're all 3 different trades. How do you know which one to choose? Well, you clearly need to decide, are you going to trade with a high win rate system or a low win rate system? Low win rate systems normally make a lot more money, but you lose a lot more. Your winning percentage is going down, but your R multiples are going up. Not a pretty good idea for prop traders. Why? Because you have a trailing drawdown, and then most people are going to blow out their accounts. So that pretty much scraps trying to go all swinging for the fences. That doesn't mean you shouldn't, but at least kind of narrows down your testing process a little bit to thinking maybe I should be all in, all out, quick wins, bank that money, build that buffer, and don't give it back. How many of you guys agree with my thinking on that? I'm not saying you shouldn't trade for 2R multiples or 3R multiples, trying to put it in the hands of what you guys, most of you guys are looking to get funded. So I'm just trying to help you understand how to think a little bit more from a mathematical perspective. Once you built a buffer and you have a trailing drawdown covered, be my guest, start going, like, do whatever you want, but we're not going to worry about that right now. So I've just now made it very simple. We're going to go in with one entry and exit. And let's do the math. Like, you're asking questions that need to be understood. If I'm going to, my max risk is going to be here to here. 42 ticks on the MNQ is how many dollars per one contract? Can someone tell me? What's the dollar value per tick on the micro? How much is that going to be? 80 bucks per contract, John says. 42 ticks. Can I get a second or a third yes on that? I want to make sure that the math makes sense. That's 80 bucks per 42 ticks. $21, $21. How many people are saying 21? 84 actually. Okay, well, I'm getting a whole bunch. Who's drinking the Kool-Aid here? MNQ. It's 50 cents per contract. It's 21, Greg says. This is why you get different strokes for different folks. Yeah, okay. So 21 is, so how much dollars is that per contract? I want to know, what is my dollar value per risk per contract? Yes, I'm making you guys do the work. This is a great learning exercise. 21 bucks per contract. So if I know that I'm going to risk $300 per trade, divide that by 21 bucks per contract, 300 divided by 21 gives me 14 contracts. So I could trade 14 contracts, and that's my max risk for this. Does that make sense? I could have less, because what if I don't trade a 42 tick stop? I just know that my max risk is that. So let's go up and put 14 contracts in here, because that's my max risk. And I know that my max risk is going to be 42 ticks. Could be less, but I know I'm not willing to risk more than that, right? Is everybody starting to understand where I'm going with this? You notice how I'm going through the engine in a methodical way. I'm thinking, okay, step 1, step 2, step 3, step 4. There's no second guessing here. Now let's go down. My quantity is set. I'm going to enter at market. Okay. I want to enter at market. I'm not going to worry about this pending order. You can set this. So what this setting is if I get a trade, if it's a missed fill, what this says is I can go up to a maximum of, say, 3 bars. This will allow me to go in increments of max pending. I can go up to maximum of 3. Jeff, you with me right now? Are you here?
Yeah, excuse me. I'm sorry. That only applies to limit orders.
That only applies to limit orders?
Yeah.
So max pending orders, this applies to limit order, doesn't apply on market?
Yeah. It's saying if you have a limit order, then how long do we keep, how many bars do we keep it open until we cancel that?
I was under the impression this is for the slippage where you get the same timestamp. How many bars are you allowed to fill based on that timestamp?
That's limit pre-order bars.
Pre-order gap, true.
That's the next thing down.
But where do I set that? Where is the setting here?
If you put it to true. Yeah, you put it, okay, so there should be a parameter there.
There should be a parameter here.
Yep.
Might be a little bug, we'll fix it.
Yep.
Anyways, the point is that you'll definitely be able to, let's just set this to 1 and 1 and leave it there. It's only for limit orders. I was under the, yeah. The whole point is that when you set this to true, there should be a setting down here that says how many bars you want it to go to. And I think we didn't add it to this. Maybe we did. I'm not sure. I think it was on the Wicker only. We rolled that out, but we can add that here. It's not an issue.
May just have been omitted on this particular algo, but it's normally there. So
yeah, we'll get that in. Not an issue. So what that means is, let's say you get we have an algorithm internally that looks at the timestamps. And if you have a whole bunch of bars coming in on the same timestamps, we block the trade because we don't want you to have slippage. But we had a lot of people asking, hey, I want to take those trades anyways, even if it gives me slippage. So we just allowed saying, if you got the signal on this bar, was saying if you get timestamps coming in, how many bars will you allow that signal to happen? Like 2, 3, 4, 5, and that's exactly what we're just kind of talking about. Okay, but it's not here, so I won't worry about that for this example. Stop loss. Okay, stop loss. So I've got the entries nailed down. I don't need to touch anything here. Stop losses. Well, what type of stop loss do I want? Well, I'm using a Renko chart. So clearly I'm not going to use an ATR stop, because an ATR is the same on every bar. Like you could if you wanted to, but you would use a multiple of ATR. But like to me, normally you're going to use a tick-based stop on a range or a Renko, because your bar sizes are static. They're the same every single bar. If you're using a time chart or a volume chart or anything of that nature, then you're most likely going to use an ATR stop. But since we're using a Renko chart, it's a tick-based instrument. So we're going to use a tick stop. So stop loss. Well, normally what I'm going to do is I'm going to want to give myself some breathing room. You can do whatever you want. What if you said, I'm going to take a trade here, and I'm going to trade with 5 tick stop loss and 20 tick target? That's technically a 2-to-1 or 3-to-1, 4-to-1 actually. A 5 tick stop and a 20, that's a 4-to-1. And you're only looking for a little bit of movement, right? You could start testing 5 ticks to 42 ticks from your stop loss. And what that means is you only take the trades that give you immediate follow through. And you could do that. No issue there. Just know this, that you're gonna get kicked out of trades if you get any pullback, but you can still test it. So let's say I want to test, I'm going to test a 10 tick stop on the NQ is pretty tight, right? All the way up to a 42 tick stop. And I'm going to test this in increments of 2. Give myself go a little faster. Okay. Now I'm not going to test trailing stops. I'm not going to test any of this yet. We can test that after, but you want to first see, does the system actually have any strategical advantage of going all in, all out on the time frames that you've chosen? You don't start testing trailing stops until you have an edge on an all in, all out scenario, because you want to at least know, are you even making money before you start trying to squeeze price? And I know traders that may disagree with that. They might say, well, I like to test trailing stops on all things. Yes, you can do that. It's a preference. You can do that in here. You can test a trailing stop if you choose to. You can test a break even if you choose to. For the purpose of this, I'm going to keep it simple. Okay. For targets, you have the ability to choose a tick-based target. Okay. I can choose a tick-based target or a risk and reward target if I choose to. I'm going to choose ticks. And then how I'm going to tell you how I think is when I go down to targets, I know that bare minimum, my stop loss is going to be as small as 10 ticks. So I know that I've already said that at the bare minimum, if it comes back a consistency, my stop loss is going to be 10 ticks. Okay. And so if I'm going to trade for 0.5R multiples at bare minimum up to a maximum of a 1-to-1, well, what is that going to be on a 10 tick stop? 5 ticks. So my first target is going to be a minimum of 5 ticks, because what if it comes back and says my stop loss should be 10 ticks? These are things that you can think about. And if I'm going all the way up to a maximum of 42 ticks, okay, and I'm going with a maximum of a 1-to-1R multiple, then my maximum stop is going to be 42 ticks. Well, to keep it simple from a rounding perspective, I might go 6 ticks for target 1, and then just keep this into 2 ticks. Or go up in increments of 4, right? Whatever you want. You can do 2, 4, whatever you want. Does everybody understand what I've just done there? I've just kind of giving myself a range of stops and targets to test. That's how I'm teaching you how to optimize a system. But you don't just start setting shit and not understanding why you're doing it. And then another thing you can do is you run it in backtest mode because we're optimizing. But think about this. Well, somebody that's trading in Europe is probably going to test a different time than somebody that's trading the US Open. Somebody that's trading crude oil is probably going to test different times than say someone that's trading the S&P. So I'm on a 3-hour time zone difference. And let's say I just want to trade the US session. So I'm going to trade 5 a.m., which is actually 8 a.m. pre-market Eastern. That's a 3-hour difference right now. So I'm going to test it at 5 a.m. And then I'm going to basically go in here and I'm going to basically, this is at 1300, which is technically 1 o'clock my time, 4 o'clock Eastern. Okay. And I want to get out at the close. So I'm going to say exit at the end time. Yes. If I'm in a trade, I want to exit going into the close. I don't want to be into the close. And it says ignore trade time false. We'll leave that because I'm telling it to trade during these times. Do you see how I'm going down the engine in a methodical way, thinking, how do I want to build this robot? Make sense? Now, money management, we don't touch base with right now. We can implement money management on a system that isn't profitable. If this system comes back non-profitable, well, guess what? I don't want to trade it. Like, I don't even want to go into money management. I don't want to do any of that extra garbage because to me, you don't want to test money management on a losing system or on a losing time frame or a losing setting. Does that make sense? So I'm going to bypass money management until secondary. Let's talk trend filters. I have 2 types of filters. I can trade trend, momentum. Now, this would clearly be on the right side of momentum and on the right side of trend. But what if you got volume divergence here on the low of this candle? Momentum's going down. There's a good chance that you could get divergence on pullbacks. Maybe momentum you don't want to test right now, but maybe you want to be on the right side of the trend. Think like a professional. Think, okay, what is the system doing? What am I looking to accomplish? Is it a reversal system? No. So if I'm trend trading, I want to capture the moves. Okay. Think about it. Let's just look at the chart. If I got volume divergence on these pullbacks, momentum's against me. If I got volume divergence in these trends, momentum is with me. But if I'm on the right side of the trend, it doesn't matter if momentum is with me or not. I might be able to capture some really good trades. Does this make sense? So by using trend in this example would probably be a better filter than, say, using momentum. I'm not saying that it's the holy grail or you should or you shouldn't try momentum. Pick and choose your battles. Keep your testing simple until it doesn't need to be. So I'm going to not use momentum for this example, and I'm just going to use trend as an example. Now, here's a golden nugget that you need to understand. You got to turn the true on. Okay. The way that NinjaTrader works in the optimizer, you can backtest multi-time frame. If I want to set the time frame to a 5-minute EMA, a 15-period EMA, 30-period EMA, a 1-minute EMA, I can if you're backtesting. But if you're optimizing, NinjaTrader does not optimize multi-time frames. It's just, they just don't do it. It'll throw errors and loops into it. They're not built for it. Okay. They do not backtest multi-time frame secondary data series. So what do? We would increase the period. So if I set this to a 1 minute, it always needs to be a 1 minute if we're optimizing. If I want to use a 1-period EMA and optimize 10 to a 20 period, I can do that. What that means is I can basically say, okay, I'm going to optimize all of the system for these volume divergence trades. And I'm going to be on the right side of either the 10-period EMA or the 20-period EMA. And or the 15-period, because I'm going to do an increment of 5, which means I could test the 10, the 15, and the 20. Or I could do this in an increment of 10. And I'm just going to compare the system against the 10 or the 20. I could do the 30 or the 40 or the 50 and test bigger EMAs. Do you understand where I'm going with this? If I use the 50 period on this, that's the same as using the 10 period on the 5 minute, if I'm not mistaken, right, Jeff?
Yeah, you just always have to have it as 1 minute.
Right. But if, let's say I wanted to use, let's say the 5 minute equivalent, I need to multiply it by 5 or 50.
Yeah, just you can only change the period. So just increase that and multiply by 5. Yeah.
Yes. If I wanted to use the 10-minute, multiply it by 10. If I wanted to use the 20-minute or the 30-minute EMAs, multiply it by 30. Do you understand where I'm going with this? If you want to use higher time frames, then just multiply these by 5 or 10 or 20, however you choose. But I'm going to leave it on a 1 minute, and I'm going to leave it here, and I'm going to test the 1 minute EMA. Why? Because I'm using a 1 minute conversion. So I want to test the EMA on that time frame if I just want to use that. Does everybody understand me on this? This is a very important part of all of the engine components to cross all of the algos, because trend and momentum is a major part of the filters. Are you drinking from a fire hose yet? I'm just getting warmed up. Rob says, I like Rob's honesty. Well, let's just think about this. If I know I'm just trading a 1 minute period, a 1 minute time frame, if I set this to 10 and 20, that's going to be based off of the 1 minute, 10 or 20 EMA. NinjaTrader does not allow you to optimize multi-time frame. You can backtest multi-time frame. So if I was using a backtest up here, not an optimization, I could do this. I could put a 5 minute or a 30 minute in here. I can test that, but I don't have that luxury in the optimizer. So if I want to test a 5 minute EMA, I would go 50 to 100. I would put 50 here and 100. And that would be the equivalent of using 5 minute EMAs. Does everybody understand that? If I wanted to use a 30, then I would use a 300 and 1,000. I don't even know what that equals. My math is shit. Right? Got it? Everybody's good? Hope you're learning. That's the point of Algo Week. Understand that? Makes sense, guys? Then why have both time frame and period? Because in the back testing mode, you can do that. In the back, it's not us, it's NinjaTrader. So if you're not optimizing, if you're just running a back test, you can just choose the periods and you can do that. It's just NinjaTrader doesn't allow you to optimize multi-time frame. So great question, Greg, but it's not us, it's them in this one. We've tried. We've tried. We do our best. That's not for the lack of effort. So momentum, we're not turning it on for this example. These are all visuals. Show volume clusters on and off. If you don't want to see them, I like to see them. I want to see them. Okay, volume clusters on. These are all visuals. These are all visuals. Perfect. Let's go down. Since it's an optimization and it's a strategy workshop, I'm clearly not going to run this for a long look back. Why? Because this is a training session. Let's do one day. I know that's not you can't, I don't have 2 hours to let this run and then not be able to train you on the rest of the material. Okay. So today we're just going to do it as a day just to show you. Okay. Let's just run yesterday to today. I always like to include my commissions. I always do fill limit order untouched. And I always like to keep the best 100 results. Now you can back test for max, optimize for max profit factor, net profit, all of that fun stuff. It's really a preference. The two that I normally optimize for are max net profit and max profit factor. Those are the two that I look at the most. So exit on session close, yes. And let's say Ninja decides to crash on me. I'm going to save this as Algo Week test. Because I always like to save my templates before something happens. Because what happens if you get a lockup? What happens if Ninja crashes? What happens if your internet goes down? You don't want to have to go through all that again. Save a template. It's a mad time saver, right? So let's run this. Let's see how many iterations we got. Holy shit, a lot of iterations. Might need to cut that down, but we're only doing one day. So let's see. Probably not going to be able to do that. It's pretty big iterations. I'll show you why. 11,000 iterations. Give it a second. It's coming back. It's going to kick down 2 hours, 3 hours. Too many iterations for this example, right? It's just too much for the system to handle that. it'll kick in a second. It'll start jumping down. It'll start coming back to reality. But you clearly can't do that. Okay. See how it's starting to pick up now? You can't run that. It's just too many iterations. So how do you fix it? It's a great lesson. You hit a board, give it a second. It's going to stop caching that data. Let it load. Don't start clicking things. You start clicking things like this, Ninja will crash. You'll get a lockup and it'll just, welcome to technology. But what you can start thinking about is going up here and start thinking, how can I start cutting down my iterations? Maybe I can change this to increments of 2 or increments of 3. That's the first thing I'm going to do. I'm going to start doing this. Minimum ticks 4. 4 tick clusters my minimum. And I'm going to basically go in here, or even 5 because it's the NASDAQ. And let's just do right here. Let's just do 4 iterations. That means I'm only going to have 4 iterations on this. Let's go down here to stop losses. Maybe let's do this in increments of 4 instead of 2. Let's do my targets, increments of 4 instead of 2. You see where I'm going with this? This is how you start speeding up your optimizations. Your increments choose your speed of optimization. Okay, nothing else. Here's pretty good. I don't need to go any in increments of 10. That's pretty good. And let's try that again. Remember, resave the template. And let's hit run. Let's take a look at how many iterations we got now. 900. Holy shit. I went from 11,000 to 900. Pretty good improvement just by changing those iterations. You see that? That's the difference between taking a year of your life to a day of your life, or a day of your life to an hour of your life, right? Optimization. I normally tend to like, and take a look, 5 hours on one day. Still a lot of time. You understand? Like for me, I don't think that we'll have enough time in this to do that, right? I'm not going to let this run 50 minutes here while we're running that. Okay. It's not a suitable fit. So what am I going to do? Okay. I'm going to go back and we're going to go do it again. So let's take a look. I just cut that down by like 12 multiples. Let's do it again. This is how are you guys learning from this? Like if you want to get information quicker, you could leave it for an hour if it wasn't a webinar, right? But do you see where I'm going with this? Like, are you learning from this? Let's go back up here. So let's wait for it to cut down. Let's put this to 5. Increments of 5. Increments of 6. Let's just put this to say 12. Increments of 10. Let's just do that just to show you increments of 10. Just to give you an example. Profit target 12, minimum of 6. Maybe cut that down. Maybe let's just do increments of, say, I don't know, like 6. These types of things. You can do these things. You can increase it, whatever you choose. And let's just take a look at that. Let's just run this. I'm doing this on purpose because a lot of people don't understand how, Jared, I just cut it down by 3x, 4x. So let's see how fast this would run. I'm only looking at one day. Remember, the NASDAQ has a lot of ticks. $20 minutes, 15 minutes might be enough for us to start talking about a different discussion. Would you guys like me to leave this? Why is it so slow? Because Ninja is Ninja. Mark, Ninja's good at what it does. It's a great platform, but it has its limitations, and most platforms have its limitations. It's because it's a tick-driven data. You're testing tick data, and NASDAQ has a lot of ticks, right? NASDAQ has a lot of ticks. So we have enough time to be able to let this run. And I'm going to move this over now, and I'm just going to show you We'll let this run here on the sidelines. Okay, we'll let that run. And I'm going to close this because we don't need it anymore. And it might take a little bit of my computer resources because that's just Ninja. It just takes a bit of time, right? And it might be too much for this to handle. Yeah, it might be too much to handle. There we go. Let's delete some of this. So this is running its test, okay? And so we'll give it a second because I think I'll give it a second here. I'm gonna basically just I'm gonna abort this because it's gonna take too much of my PC resources. And yeah, you can do that. You can do that as well. And well, I've already built it. I've already got an optimized setting and an optimized. Let me show you this. So this is running here, okay, and it's going in 9 minutes, okay. So you know, and it might take a bit of time here, but it might speed up a little bit. While it's doing that, let's go in and first of all, how did that help you understand optimizing? Maybe you could just give me a little bit of context on that. Did that help you guys at all in learning how to build and test and set things up? Did anybody learn from that? Okay. Okay. So bear with me here, guys, because I'm going to abort this. Just taking too much of my PC resources, and I'm going to make it a lot faster. Okay. I'm going to basically go in and I'm going to just increase the iterations a lot so I can just speed up in a couple minutes. And I'll show you an example, and then we'll show you the back test results for the template I built on the NQ for everybody. And I have a pretty good template already pre-constructed on the NQ. Just give it a second here. It just needs to wait for this to uncache, and then and we'll give it some time. There it is. So I'm going to move this. Let's just do this for a second. Let's just run this, and I'm just going to basically start at 10. Let's do that, and let's just run this to stop loss minimum 20, and we're going to go into that, and maybe I can cut this down to say, you know, that, and let's just put targets 10. I'm just going to make this go a lot faster, and increments of 10. I'm just going to go a lot faster, and we'll see here how this works, how fast that goes. And it should be really quick now. I'm just doing a day, right? So it's, we'll give it a sec. There, yeah, 96. This should calculate in less than a couple of minutes, not even. And then that way I can go in and I can show you a few things that I want to, and then we'll go into the other template, and then we'll take a water break, and then we'll talk about the wicker. And it's right along the right timelines. I think it's, you know, we're halfway through Algo week day 2, right? We were able to cover pretty much all of the volume divergence. And I have built a template. We're going to be putting all of the templates in the members area for everybody to, if I have daily targets to hit, shouldn't that be sufficient and successful? Yeah, you can actually set you can set your goals. You can set that. You don't even need to set stop loss and target optimization. You could actually optimize for daily goals and money management, John. Yes. And ultimately we have templates. So I'll give you an example. Is I have a template that I just built for the NQ on a different bar size. Yeah, you can use some of our templates, John. Yes, but I also need to be very careful in how I deliver this message in a non-assertive way. You need to learn that if you're going to run algos, you have to learn how to do this. Like, it's not, I get everybody has goals and they want to live their life, but if you do not learn how to use your tools properly and you know what it's doing and why it's doing it, then what'll end up happening is you become dependent on somebody else. And then therefore you're not truly good at what you're trying to accomplish. And then you're going to end up finding yourself in a situation where you don't know how to do something when you need to do it and what it's designed for, and you're at a disadvantage. And sometimes templates, they stop working. Conditions change. The market starts adjusting. The markets are not static. And we talked about this yesterday. So you can have a template do very, very well, and then all of a sudden it just stops working. And you're like, well, what the hell happened? The system's garbage. No, the system's not garbage. The system's doing exactly what it was designed to do. The algorithm is doing exactly what you programmed it to do. It's just the market's changed. Volatility and volume adjusted, whatever. Great example is if you have a trend system, it's going to do really well in trending days. Right? Yeah, strategy analyzer is the optimizer, John, and we're using the strategy analyzer. The optimizer is a part of the strategy analyzer. So a great example would be the training we just did today, and we'll go in and we can help you understand that. And if you really need more of a demo on the strategy analyzer and the optimizers, Jeff and Jim are going to be doing a workshop on the engine. And I think it'll be a great example of when they can break down how to set optimization parameters versus backtesting parameters. I think that'll be like Algo Week Part 2. You know, we can do another Algo Week Part 2. Would you guys like that? We can maybe do another workshop on, you know, the engine and the optimization parameters in more detail. Hey guys, like, we're here to help you guys as much as possible. So if you can just, if we know where you're struggling, then we will do it, right? And we already know that most people don't understand the engine. And the other gap is most people don't understand Ninja's strategy optimizer. Like, that's just, this two just training sessions in and of itself. So that could be day one could be the engine, and day two would be strategy optimization. You guys want that? We have a couple algos coming out this month, new algos. And once we get those rolled out, we'll do the Algo Week Part 2. It'll be a great segue for that. Yeah. We got your back. We'll definitely take care of it. We'll do it. We got another less than a minute to go here. And then what we'll do is we'll take a look at these and we'll do that. 40 seconds and counting, guys. Just, it's a great example. Yeah. How to cut off trades, not manually when NinjaTrader just disconnected. Not sure your question, Hoffman, but I'm sure Jeff can help you with that. Yeah, we're going to be adding the templates. So I built around the templates for all these algos for Algo Week. I showed the trend stepper yesterday, which is really great. Really, really good profit factors on the trend stepper. And let's give it a sec. There it is. Okay, so let's take a look at this. So I don't think it took trades today because we didn't have downloaded data for today. Yeah, it just traded yesterday. So I was just looking at yesterday because you can see, even though I chose today, NinjaTrader did not download the data on the test because Ninja does not allow downloading intraday data on the same current day because NinjaTrader data is baloney. But let's go into this. Okay. I have 100 results. This is maybe a day 3 on testing and optimization, understanding KPIs. Like, there's so much to learn in this, and it just fascinates me. And the amount of opportunity we have to teach people what this all does and what this means. And I just love this. I want to help everybody understand this because I'm passionate about quant trading. I'm really passionate about quant trading. And so when you look at this, like the first thing everybody should be looking at is, oh my God, like I had a 100% win rate, 4 trades. Okay, well, that's just this iteration. That's just, so let's take a look at this. I have it optimized for profit factor. And if I want, I can take this and I can sort by total net profit. Right there. So here it is. This was the best setting for best net profit, best profit factor right here. So I can sort by profit factor and I can go down and I can see that this is probably the best setting right here for this time frame for the yesterday. Like you can't rely on yesterday. It's one day. That's just, but it tells me a story that this made more money than these ones. However, same amount of trades. One's probably a different R multiple, right? Targets and stops will be different. So if I go and I look at this, if I look at this made $200 versus this one made $1,000, it has a lot to do with the stops and targets. The next one here had a loss, which was the next one here, and then it started kicking down, right? So clearly I'm not going to start off. I like to look at the top like 3 ranges. So like this is like the best range, first of all. Then there's a 3, and then there's 1 and 2s. So I like, these are different groups to me. This is like the best, this is the second best, and this is the third best. And then I start looking at, okay, well, if I made $500 here and I didn't even have a $500 here, then I'm not even going to look at these. Right? If I had a 500 here, I would look at it because I would want to see, like, you know, because I'm sorting by profit. But let's just go and take a look at what that looks like. So if I go in and I take a look at this setting and I go in and I start taking a look at the chart, take a look at it. What did it tell me my cluster size was? That's the key here. Look at this. It's looking for really big volume clusters. See how big that cluster is inside that candle? Let's go up and take a look at that cluster size. It's telling me a 20 tick volume cluster. Heavy, heavy, heavy volume stacked on the reverse side of that bar. Interesting information. Interesting information, right? Like I have really big volume impacts, right? And that tells a story. Like that tells me a lot about the setting here. Let's just go in here for a second and take a look. All of the way down, this 20 is a volume cluster. It's the first setting at the top, 20 tick cluster, 20 tick cluster, 20 tick. It appears to me that the 20 tick cluster was the best. Now that may not be ideal for the prior day, but at least it tells me that I could maybe increase my volume cluster to 10 and test 10 to 20. Let's go to stops and targets for a second on the top 3 ranges here. Stops and targets, I had a 30 tick stop loss and a 10 tick target. That's a very tight scalp. Okay, let's take a look at this one. I had a 40 tick stop loss and a 30 tick profit target. It's almost a 1-to-1. Okay. And then I had the next one down was a 40 tick stop. And then there was a 40 tick stop and a 30 tick stop. So 30 and 40. And then these ones here was 30. I'm always looking at stops first. Stops 30, 20, 30. So 30, 40s seem to be the best. So let's take a look at this. So what I would do is I would look at, okay, stop loss. I would go here, 30. Okay. I just maybe put it to 40 and put that to 5 to see what's, yeah. And then let's go to target. So target is, I got 10. Take a look at this one, 10, 20. This is 30. This one here is 40. So 10, 20, 30, 40. Okay. So, and then this one down here is 30. So let's do this. 10 to 40. And let's just run that for another day. Let's just go back 2 days now. Let's just take a look at this. You're going to see a big increase in speed here because I'm going to be able to go back just 2 days. Let's go back to Monday. And let's take a look at the stats on that. It's called reverse engineering your settings, right? It's called reverse engineering your settings. And this is how I do it, but I normally do it at a week at a time, and I normally let it run for an hour. So normally what I'll do is I'll let it run for, I'll let this run for like an hour. I'll test a week at a time. And then what I do is I go back and then I'll test week one. If I get really good settings in week one, I take those settings and I try to backward. I try to look back, right? I look back and I go back and I test it a week at a time. I don't test it longer than a week at a time because I need to know because curve fitting is, here's the thing. Every form of optimization is curve fitting. There's no such thing as non-curve fitting. So this is where I think I'm going to kind of teach some of the old dogs in here some new tricks. Back testing and optimizing is all curve fitting. Everything is curve fitting. You're looking at the past and saying what was the best performing situations in the past, right? Think about this. You're not going to try to look for the worst. Why would you want to look for the worst? Doesn't make any sense to me. Like, why would anybody look at the worst parameters? It makes no sense. Like, you're trying to stack some form of an edge by looking at what's been performing the best in the past. And nobody, even if you have the best of the best in the past, knows if that's going to work in the future. Like, nobody. Even Wall Street quant funds, no, they employ $20-30 million on a fund to just find quant guys to just do this all the time because nobody knows the future. The only thing you have in the firm form of future analytics is fundamental data. Fundamental information is the only form of future leading analysis outside of intrabar order flow. Intrabar order flow is the only real-time leading information. Even volume profile is lagging. And when you look at curve fitting, how you get away from curve fitting is you run what we call a walk forward sample size, which means you take your settings and you deploy it in real time. And if you're doing well in real time, then that means that the template that you're using is fairly stable. Does that mean it will stay stable forever? No. And what I normally encourage everybody to do, and this is what we talked about yesterday, what we talked about yesterday is ongoing testing. Well, everybody just says, fuck, Sean, I want to be lazy. Well, you want to run a money-making computer, but yet you don't want to continuously update its settings. Like, if you have an opportunity to go and slay shingles for $300 a day in the heat on a roof, or run a business where you're exposed to risk and employees and all that and have to drive through traffic every day, or would you rather spend 2 hours every week running a new optimization to make sure that your targets and stops are in alignment with the last weeks of data? It's a no-brainer, but everybody just throws logic out the window. Okay. Think about this. If every week you spent 2 hours at the end of every week running an optimization of the past week to determine the best settings that you had over the last week, every single week, and you try to run that forward, wouldn't that be a pretty good business? You run a week of test, okay, on Friday, knowing that you got the most congruent information from the most recent data, and everything's like, oh, but I want to do a month of back testing. Oh, I need at least 500 trades. Fuck, let me tell you something. You're a day trader. What happened 3 weeks ago is not relevant today. Think about this. You're not swing trading, running hedge funds, running an optimization on daily timeframes, a month or two. No, and that's, let me just ask, JTiz is asking, curve, every form of back testing and optimization is curve fitting. Every form of it. The goal of a back test and an optimization is to find the best parameters. Curve fitting would be you have a back test and then you start blocking. Okay, I'm not going to trade at 10 o'clock. I'm not going to trade at 3 o'clock. I'm not going to, and then you remove that. That's called curve fitting. If you know that you're going to run your system from 5 a.m. till 12 every day, and you don't remove all of the losing times out of that, and you leave it as is, that's not curve fitting, because you're not removing the losing situations. You have to be aware of what is helping you versus what is hurting you in running an optimization. So if you're somebody that's trying to produce a 10 profit factor and you run an optimization and then all of a sudden it's like, oh, it took losses on the open. Say, take a look at this. Completely different scenario, just running 2 different days of information. Do you see that? This is a great example. This is a great example of, I would obviously want to do a much smaller testing on this and targets and stops, but this is a great example of looking at the data and going back. Okay. Stop out here, stop out here. Okay. Didn't have anything else. Now I think the 20 tick cluster is far too big. But we're going in increments of 5. So I think, and we don't have enough time to run a proper optimization. You want to give yourself at least an hour to 2 hours to really not lose sight of the data. Most of my optimizations for every test takes me 2 to 3 hours. I have a testing computer and a main computer for that. Okay, now do you need to do that? No, not always, but it's just nice to have that luxury. Now I'm going to just kind of close this out for a second because I've already done all this for a great template on the NASDAQ. And I didn't do anything other than just increase the time frames. I'm using a 40 tick bar, an 80 tick reversal, and a 32 tick offset. I'm going back all the way a month. March 27th to yesterday, 2 days ago. Okay. I optimized for a 14 tick cluster. Why 14? Because that's what came back. 14 ticks on an 80 tick reversal. It's like 20% almost. And I optimized for the EMA. And I found it came back really good with a 10 period EMA. I optimized a 10 to a 30 period in increments of 2. And I don't have anything else in here. Like I'm not even running anything. I'm just running this in the morning. Like this, like for me, if I'm trading the NASDAQ, I'm only looking at it in the morning because I'm an afternoon trader. So like, why would I run the tests in the afternoon? Like I built this to kind of accommodate my goal of testing. Do you want to trade in the afternoon? Sure, just run a test in the afternoon. But do you understand what I did here? And then I look at this as an 80 tick target because I went using bar tick. I went using the bar size reversals. I wasn't looking for scalps. I was looking for quick scalp / day trade. And I had a really good result. Like, you know, like, and that's for the entire month. Now this is on the NQ, this is on the MNQ, right? And could this be improved on? Absolutely. Like 1.95 profit factor over 100 trades with a 67% or 68% win rate on the NASDAQ is fantastic. It's fantastic. And what I'm going to do is I'm going to go in here and I'm going to show you the trades because let me just explain what it's doing so you can see it. So the size of the volume cluster takes up almost half of the wick, which is why volume is so significant. It's a pretty big volume cluster. It's almost 20 ticks. So it's a pretty significant amount of volume in the bar for it to stay there. And that's exactly what this is. You'll see in this situation, if I was using momentum, I would not get that signal. But I'm using trend and it needs to be on the right side of the trend. It needs to be on the right side of that EMA. Now you could probably change this EMA setting a little bit and make it a little bit better, right? I mean, it's for the most part, it's the EMAs are going to do what it does. But take a look here. Now, could this be improved upon? You know, yeah, you could have a money management target. If it pulls back off your high watermark, it cuts the trade here. Like these are things that we can discuss here in a second. Take a look. There's the target. There's the stop, right? With trend. Okay. Now, let me just kind of talk a little bit about why I think this is a really solid template on the NQ, because it's not too small of a time frame. It's not too small of a time frame for you to trade the NQ. It's a fairly decent. The NASDAQ is a fast, whippy chart. If you can find a solid template on it, you're in a really good place. And I feel I've nailed it in with this template. Let me give you an example of, you know, in these situations, like when you have you have these run-ups in profit, right? Like, let me kind of explain how I would look at money management testing on this. Let's go to analysis. And well, first of all, I look at outliers. Like, what's the biggest outlier here? The biggest outlier is on this day here. I had a $1,300 loss. It's the biggest losing day we have. So that's an outlier, right? So the first thing I'm going to do is, well, what can I do to eliminate that without eliminating this or this or this? See, what happens a lot of time is you'll implement a change in your testing or your settings, and you start tweaking shit, and then it removes your efficiency. It's kind of like you're cutting out the losing trades, but you're also cutting out the winning trades, and that's not good. So what you want to do is you want to find a happy medium, and you want to use that data to extract. So how do you determine that? What I tend to do right now, if I have this template, once I've nailed down a solid all in, all out template, I then go and I spend my time in the money management. Because now I have the ability to go and take a look at some information data, and I look at congruence. I look at, okay, if I'm going to look at net profit, I'm going to look at, okay, well, let's just take a look at confluence. I have this going across here. These two hit those 2 days. That's 800. Okay, so there's an 800 level of confluence on that day, which also hit across that day, which also hit across 4 days in this week, and then it hit across here. That's a pretty important number to be paying attention to running this template, because it's hitting it every single week on each of those days. So what I'd be doing is I'd be saying, okay, well, if I know that I'm hitting $800 profit on a lot of those days, could I not use that as maybe a high watermark feature and say, after $800 of profit, I'm not going to give anything back? You might want to set it to 1,000. It's hit 1,000 every single week, at least once. And have that as your max daily goal, or 800 as your max daily goal, or your high watermark feature. On the other side is what I like to do is I like to look at max drawdown. And this is how I normally don't work from profit. I normally work from loss backwards. And it tells a story, right? It tells a story on the losing, the max drawdown every single day. The max drawdown, there was a moment where I had 650, 650, 650. So 7 would be the benchmark here. Would have had one day where I hit my max drawdown if I had it at 7. And that would probably be a really good starting point, reverse engineering back from a max drawdown of 600, which means setting a max daily loss of like 700, right? And then ultimately setting a high watermark of a certain amount. Now, how do you do this? How would we go about doing this? Well, normally what you do is you take a look at this information right here. Your average losing trade versus your average winning trade. And then what you do is you build out you have to set this first. So you're going to, now I'm not on an optimizer, so we can't optimize for this. But what you would do if you were running an optimizer is you would set a minimum and a maximum amount in here. So if I go back and I grab a strategy analyzer, and I'll show you what I mean by this. I'll just do this for this example just to kind of make it, I want to be able to show you a real example. So if I was looking at it like this, and this is a really sexy template for the NQ. With a 2 profit factor over a month, I was blown away by that. I was like, yes, amazing. This is an amazing system when you use it the right way. And what I'm going to do is I'm going to show you, if I'm going down here, let's just do this, and let's just pull this template, because this is the template I'm using. And right here, I'm going to load this template. So what I would do is I would come in. Oh, that's the back test. Let's run this through an optimizer. Okay. Let's go down to money management, and I'll just show you how to set the money management up for this right here. So first you got to turn it to true. Okay. And then you need to set you open these up. Okay. And so what you end up doing, okay, is I'm going to basically not look at a max goal. I never optimize for a max goal because I'm never going to stop the market from paying me if it continuously just keeps going in my favor. Like, why would I ever stop the market from giving me more money? If you get these 1 or 2 random outlier days that just keeps pumping big profits with no drawdowns on your trades, hey, take that, man. That's a mulligan once in a while. But you always need to protect your profits. And you need to be thinking like that. Like, don't give it back once you have it. Don't give it back once you have it. So think about that before blocking yourself from a huge day. If you could have one big day that really rewards you and you cut yourself off from that because you said, well, I'm going to stop trading after I've made so much money. No, you can do the exact same without cutting yourself from upside. Let's say you have a trade, you have a momentum trade that just keeps pumping. And then you get another momentum trade that just keeps pumping. You get another momentum trade that keeps pumping. It didn't give you any drawdown on any of those trades, but you said, well, I'm only going to stop after I've made so much money. Well, you wouldn't be able to capitalize on this. But instead of that, you can set your drawdowns, your max loss amounts, and your high watermarks. So they say, well, after I've made $800 in profit, let's say this trade started going against me, I can cut myself there and I capitalize on those two without giving myself the inefficiency of not being able to participate. Would that have given me the follow through? Does that make sense, guys? I'm all about taking everything I can out of it, but not giving it back. Let your winners run, but don't give it back. That's how you would do this. So you wouldn't set a max goal. You would do it all from a max losing perspective. Okay. So then what you do is you think about this from a logical place. We've already determined that the max losing situation in this, max drawdown every single day, we want to have a max loss at about $800, right? Your max drawdown was about 800. So what I would do is I would basically go in here and I would set my max loss to say like 600 to 800, right? And here's the thing, like, or you can just set it as a fixed amount to 800, right? Because what the max loss does is it stops you if your first trade is a loss, your second trade is a loss, your third trade is a loss. Like, you might come out a day and it happens, and it will happen. So don't be caught off guard if it does happen. If you have a day where it's just the first trade's a loss, the second trade's a loss, the third trade's a loss, you're like, shit, today is not my day. You don't want to not have a max loss amount, because if that just kept happening, that's where you could take a small losing day and turn into a big losing day. But you also want to give yourself enough room that if you have, let's say, 1 loss or 2 losses, but then the next 4 trades are wins, you don't want to cut yourself short by cutting yourself out too soon. Does that make sense? So if I know that my average trade amount is 330, technically 2 trades is $660. Okay. $660. So if I want 2 losing trades, I would set this to $660 because my losing trade amount is here. So I would set that to 660 if I want 2 back-to-back losses coming off the open. Okay, that would be my kill point. Okay. However, if I want to give myself 3 trades, well, then that's 990. So I would basically put myself at a max loss of $1,000. Right? Like I would give that, my kill switch would be $1,000. Right? That's one way of doing that. If I want 3 losing trades in a row off the open, and that's like, okay, I need to go drink some tequila or something. Right? So if I'm looking at, well, this is the MNQ. I'm just saying I have it set to trading a fair amount of contracts. So I have this set to trading 8 contracts. So you might set this to 4 contracts or 3 contracts. This is micros. This was a micro example. Yeah. You could set to how many contracts you want. That's why that's why I can't build a template. and give you money management settings. A, it's against the law because I can't force you to trade a certain amount of money. And B, I don't know how many contracts you're trading with, what size evals you're trading with, how much money you're trading with. So what you do is you build your template based off your risk parameters. And then you look at your risk and you say, okay, well, if this was 150, because you're trading smaller size on the micros, 3 losing trades would be $450. You would put 450 here, right? It's all relative to whatever size you're trading. And then what you do with the high watermark is you look at your run-ups and you say consistently net profit on the days. Now, here's the key. If I look at this and I say, okay, I've got $800 here, and I got $800 here, and I got $800 here, and I got 800 here, and 800 here, and I got 800. Well, I want to make that consistently, okay? So I could maybe use that as my high water mark, or what I can do is I can look at the bare minimum here, here, here. It's a good threshold. That's 500, 500, 800, 500 would maybe 500. Maybe what I do is I say, okay, after $500, I'm going to implement a money management. So that's 2 trades. Technically, that would be 2 trades, or I could implement it intra-trade. So what does that mean? Well, if I know that my average winning trade is 294, well, that's technically 2 trades. So after 2 winning trades, right, I can go down to here and I can say, okay, my high watermark, turn that bad boy on, realized or unrealized. Okay. Let's take a look at this. I'm going to turn this on. We'll show you what this does. So I'm going to go in here and I need to turn it on. And then I'm going to look here. So I'm going to start with my high watermark is activated at a certain amount of money. So what that means is after I've made 2 winning trades, that'd be $600. How do I know? Well, what if I don't know? What if I want to optimize for money management? Well, clearly I'm going to try to make 1 winning trade in the day. So I'm going to put it at $290. And maybe I don't know if I should just keep letting my trades go before kicking in a high watermark. Well, let's just put that in 290 times, it's just 5 trades. 290 times 5 trades is like 1,450. And then I just go in increments of, let's say, $100 or 290. I could go in increments of trades, which would be increments of 290. Right? 290 every trade times 5 is 1,450. Or I could go in increments of, say, like $100, whatever you choose, because you could be in the middle of a trade, and if it starts pulling back and it's like it breaches your watermark rules, you could get you out of the middle of a trade. You could be exiting mid-trade for money management. Like, that's like, okay, I'm up at the table, I'm walking away. Like, that's the way you look at it. And what you can do is you can say, okay, well, once I'm up, let's say I'm up 1 win. So I'm up 290, and let's say I'm up another win, 290, and you say, okay, on the next trade, if I start to pull back a certain percentage, what is that going to be? So I'm going to basically say, well, if I start pulling back 20% off my high water mark, so if I give back 20% of my profits up to maybe 50%, I don't want to give back 50% of my profits. Like, that just tells me that I'm giving back money to the market. So I could implement that. So what that means is I've just basically set up, I'm going to optimize this, go in increments of 10%. So it's going to tell me after I run an optimization, if I were to run this test, I could deploy that to my current existing template, and I would then know what's the best money management filters to use based off of the last months of data on the NASDAQ. Now, is that going to guarantee me the future? No. Is that curve fitting? No. It's just telling me, had I have put money management applied to last month's data, this is what could have happened. Did you guys learn how to do that? It all starts from your quantity amount, and then it all starts from your loss to win amount. And then that tells you, do I want to, like, I program a max goal or my max loss, which is number of losing trades. And then I work my way up in how to optimize for money management. This type of shit you ain't learning in standard webinars. Like, you're not going to go to every vendor trying to sell you a bunch of freaking tools, and they're going to spend the time teaching this to you. This is 10 years of me being behind the screens of being a quant trader. Like, I'm all about algos. I love automation. I love I'm a money management guy. I'm a stats guy. I love it. I just love it. And this is why I built the engine. You're not going to go to any other vendor right now in the business. I don't care who you are. And if you can find me one that has something like this in their algos, impress me. I will reward you with lavish bricks of gold. Nobody's going to do this, and no one's going to take the time to teach you this. I'm teaching you this because when you learn how to do this, like truly learn how to do this, it might take you a week. Fuck, it might take you a month. Who cares if it changes the next 5 years of your life? Nobody wants to spend the time learning. But you need to have a good teacher, right? And that means we need to step up and do more teaching. Can we agree? We can meet in the middle. If we're going to spend more time teaching, you'll spend more time coming and learning. Just takes time. Okay, just takes time. So the cool part is, I've already built an awesome template on the NASDAQ. I tried to help you guys out for this week of Algo Week. And how many of you guys would say that that's pretty awesome? Now, let me kind of tell you this. You could probably take this template and run it for 2 months or 3 months in the past, and it blows up and it doesn't work. Well, let me just kind of ask you a question for a second. Yikes. Swing and investors here. Day traders here. Let's just use this as a number of trades concept. If anybody ever comes to me and says, can you show me 3 months of back tests? I'm going to block you. I have no time for that naivety. You are a day trader. If you are here and you go back 1, 2, 3, 4 weeks, do you truly think that what happened 4 months ago has any relativeness to what's happening in this week as a day trade? Waleed, I tell people that because I have a lot of people that come to me and says, show me back tests over 6 months of data and show me back tests over a year of data. Okay, I will do that if you're a swing trader and an investor, because you don't have enough sample size of data. You might run a back test over an entire month of data and get 5 trades here. You might do a back test over an entire month of data and get 100 trades here. Think about it. How many trades do you need to prove to yourself that something is holding up? Normally, I'm going to look for 50 to 100 trades as a day trader. When's the last time you ever went and manually logged 50 to 100 trades in your own trading journal and proved that you can have an edge? Discretionary traders don't do that. They look over maybe a week. Oh, there's a setup. Oh, there's a setup. Oh, I think this works. I'm going to trade it. Boom. Day traders and an algo, 50 to 100 trades is a lot of data. That's a lot of data. Like 5-6 trades a day is a lot of trades. You can go back 1 year and maybe get 100 trades as a swing trader, and that's a good sample size. Does everybody understand? I want you to change your mindset to number of trades versus length of time, because it's all relative to the system you are trading and the type of trader that you are. If you're a scalper and you take 20 trades a day, like 2 weeks is all you need. Like, you're a scalper. You have no bearing on market context. You have no bearing on trend. You have nothing. Like, it doesn't even matter. Which is why I don't sit there and I put myself into an environment that's unhealthy for testing. Because all that matters is if this can hold up in the future. And if it doesn't, then I'm going to run another test on Friday. Maybe I need to adjust my stops. Maybe the market started quieting down a bit and I'm not getting as much follow through on my exits. Maybe I'm only getting 50 ticks out of my exits, not 76, because the market got really quiet last week. Okay, maybe I need to run that. And then all of a sudden the next week it opens up, boom, and it starts getting really trending. Well, if I have a 50 tick target, because this week was really quiet, and I take that 50 tick target into next week and the market starts trending, I'm like, holy shit, I hit all my targets. It was giving me a lot of follow through. You readjust, you can adjust. That's called fine tuning. That's called taking a good template and adjusting it and template. Like the S&P template, when we rolled it out, it was awesome. And then the market conditions got really quiet, chopping, and really wasn't doing good. And then everyone's like, this system sucks and all that is garbage. And then all of a sudden the market's whipped and they started opening up and started trending. And everyone's like, wow, I'm getting 4 winning trades. Yeah, it's because the conditions change. Right? So what I normally suggest people to do is adjust on a weekly basis. It takes an hour to adjust your stops and targets. You don't need to go and change your cluster size. You don't need to go and change those things. You can test your stops and target and maybe your EMA. It's the only things I would run a new test on, right? I wouldn't, and you only need to do it at the end of every week. Like, you don't need to adjust anything. And then you can always just test money management, because money management is on a trader by trader basis. Does that make sense? Okay. So I built this template. I'll give it to you. I will, I'm adjusting the carb of my engine for the altitude. Okay. So can we agree that we've covered a pretty heavy amount on the VD Algo? For those of you that want this template, I've made it. You can have it. You will get it. If you don't own the system, there's going to be an opportunity for you to get it at the end of this event. But everybody who owns it, great. Thank you for your business, and you can have it. We'll put it in the members area today. Okay. I want to take this opportunity to just grab a quick water break, bathroom break. We're going to come back in 3 minutes. And we're going to end with the wicker and the reversal. Give me a yes that you're getting a lot out of today. It's a valuable training, and you're moving away with some great context. Okay. Be back in a couple minutes. Coffee break, stretch the legs, do some push-ups, go for a quick swim. See you in a few minutes. All right, we're back, guys, from the nice little break. Hey, thanks, Rob. Yeah, appreciate it. So here's the truth, guys. I know a lot of you know me from the past years and years of being with us. And some of you are probably just joining us, new clients or even non-even clients. I know sometimes I can get a little bit hardcore on the mic. You know, I might cuss from time to time, or I might say some crazy shit and, you know, be a little bit aggressive, but that's just passion, right? Like, that's just passion and love and intensity. Like, you know, for me personally, like I've been living behind the charts and been trading for a very, very long time. And, you know, I work with so many traders all over the world. You can believe I hear some of the most craziest shit you can imagine, some of the most stupidest things, some of the most intelligent things. And sometimes I forget that everybody's at different levels of experience. And so all I ask is that I promise you this, that we will never, ever do anything that is out of context unless you deserve it, right? If you're rude, aggressive, or you're you're somebody that is causing a problem in the community and you're just being an idiot, then we're going to be an asshole to you and we're going to treat you as such. But if you're somebody that's just learning and willing to learn, just be patient with us, because we've got a lot of knowledge and we can definitely help you. We're the best at what we do. We're just passionate, intense, and we're just straight shooters, right? Like we're not here to impress anyone. We could care less if you love us or if you hate us, but we're good at what we do. Right. So how many of you guys are in agreement that sometimes passion can be mistaken for intensity? And I know sometimes I might scare a few of you, but we're all here for the same thing. And I can assure you that you know, you're in good hands. All right. So now that I got that little you know, Dr. Phil moment out of the way, we'll get into it. So we're going to talk a little bit about the wicker. We're going to end this opportunity with the wicker, and it's not the wicker, it's called the hybrid algorithm, but we're going to talk about the wicker, and we're going to talk about this system. I love this system. It's such a unique concept that it really is unique in that it's a multifaceted algorithm. I don't like to use all of the settings to it because I just think that you can pick and choose. It's like you own a Ferrari. You don't need to use every freaking feature every single moment, but you can do a lot with it. And it's a hybrid algo for a reason. It's a hybrid algo. It's a 4-in-1 auto trader. It's a reversal trading algorithm. It's a retest trading algorithm. It's a trend trading algorithm, and it's a momentum trading algorithm. Okay. And the key here is to understand how to set it up, because if you set it up in a random way, you're going to get randomized information. But you set it up in a unique way, and we're going to talk to you what that means. It's going to teach you to look at the market from a different lens. Now, I'm only going to be focusing on reversals and retests today. Why? Because I only have so much time, and I just want to talk about I just don't have enough time. Right. And we can only do so much in one sitting. The trend and momentum and the trends and momentum are great settings and great systems. We're just going to talk about them at a different time. So we've already talked about the disclaimers. We've already talked about algo, man versus machine. We've talked about the engine. We've talked about the bar type logic. We've talked about Rankos. Okay. We've talked about momentum and trend filters. We've talked about money management and how to set up P&Ls and watermarks and goals and all that fun stuff. So let's talk about 4-in-1 auto trader, right? Like it's what it is. It's a 4-in-1 system. So this system does a few different things. It will take momentum shifts in momentum on fast momentum. So it'll take momentum trades. Okay. It will take big momentum confluence shifts where you're using the larger momentum oscillator versus the smaller oscillator. This was an added feature request by one of our traders who was trading these quite successfully. And I was building the reversal algorithm. It was originally going to be called the wicker system, which is only for reversals. But then he said, hey, Sean, if if you want, take this concept. And so, we did, and, he agreed that we could add it in, and I gave him a free algo out of the deal. And the whole concept here is that we just added his Momo trades into the algo. Now, I like to focus on these because it's what I was originally building and what I designed the system to do. And essentially what it does is it takes reversal trades on flips, so to speak, and you can take that with trends and momentum, etc. But what makes the system so unique and powerful is the wicks, the wicker. And they're two separate templates. You have a reversal trade, you have a wick trade. And let's just draw it. You can have the market come down and then reverse and take off. You can have the market come down, reverse, retest, equal low, or retest higher low, right? And take off. It's called a retest entry. How many of you guys have seen reversals just flip and go? And then how many of you guys have seen a reversal and the market's like, oh, we're going to test. Is this truly where the market wants to find support or resistance? And then it retests and it goes. Well, a lot of times what you're going to do is you're going to see that, you know, maybe you'll see it like this. And then it takes off, right? You get the low, get the higher low, and it rips. Sometimes you come in, it's just a clean boom, boom, gone, right? Sometimes it comes in and it consolidates and then takes off, right? And sometimes it just comes in and takes off, right? The market reverses in different ways, many different times. Well, we've built this in a way where you can remove all this noise, and let me show you what this means. Now you can combine all this into one algorithm where you can do momentum trades and wick trades and etc. all together, retest trades if you choose to. But I strongly think that looking at the system, it should be broken down signal by signal first before you start trying to combine the signals. Okay, so I'm going to show you an example of two different types of ways in which you can run this type of a system. Okay, we're going to use the MNQ. So let's just take the other settings that I had on the MNQ, the 40, 80, and the 32. Okay, we'll run on 3 days of data. Okay. Now this is what I love about this system, and I love all of them because I built them, and you know we have a lot of successful traders trading on all of them, but we also have a lot of traders struggling on all of them because they haven't learned the right way to do things, which is why we're putting on these events, right? Let's go in here and take a look at this, and let's just take this and let's just put this say to 20, 200, 17. It's the same chart. It's the same information. It's just looking at the data from a different lens. Would you agree? Like it's just modifying price data to look at it from a different perspective, right? Now, if you were trading a reversal system and you were trading, okay, if you were trading with an EMA and you're trading with an EMA, this type of a bar setting, you would get a reversal here, you would get a reversal there, you would get a reversal here, you'd get a reversal there, you get a reversal there. Like you could have a whole bunch of freaking reversals all over the place. What we can also do is we can tell the software, say it has to pull back 10 bars before it gives me the reversal. So this would not be a signal. This would be a signal. This would not be a signal, but this would be a signal. This would be maybe a signal because it pulled back 10 bars. This no, this no, this yes. So we can tell the software that it has to pull back enough to give a reversal, which will help you in these types of scenarios because you want to be able to have a certain amount of pullback if you're using bars like this. And if you modify price to be looking something like this, well, you can just see these are just big reversals. Like now, the difference is this candle here, it only needs 40 ticks to reverse. So this is not a reversal. Like when you think about it, that's not a reversal. That's not a reversal. That's not a reversal. That's not even a reversal. That's a pullback. You can treat it as a reversal, and you can set up the algorithm to take reversal pullbacks in the direction of trend or without trend. You don't need the EMA filters to have that. It's just going to be a lot more noisy to test. Or you could take a look at a chart like this. And you can see the difference between little blips in the market and true reversals. Like, that is a reversal. Massive move down, massive run up. Reversal. Massive move down, reversal. Consolidation, push up. Still reversal off that. Massive reversal, big trend. So one of the things that I started doing with this algorithm, that you don't do this. Well, you want to know something? My brain goes into some really deep concepts sometimes. And I would really love to see what the volume divergence algo looks like, running it on this type of a bar type variation and seeing what these volume clusters would be like on these wicks. I would love to test the V. I'm going to do that. That's a fun project for me. I'm going to just see if the VD algo, what the VD algo will do on some really hybrid wicker charts. I bet you it's going to be badass, because I guarantee that during some of these wicks, you're going to get volume divergence. Volume is going to be stuck on these wicks sometimes. And I'd love to see what that looks like. So that's going to be my next experiment, and that'll be a fun template to give for anybody that's interested in having it. That'll be my passionate stuff for me to do. So let's get back on track. So tell me that you would agree that during the smaller time frames, if you take a look at this for a second, let's just take a look. The smaller time frames, every one of these is a reversal on a smaller time frame, and then everybody takes them. Oh, the market's going long, and then all of a sudden, the market just slams them. Same thing here. Everybody starts trying to sell here. You see those wicks in a smaller time frame. Everybody thinks the market's going to go down, and they get run over because they're not really reversals. They're not true rotations in the market. And the way I see this system to be very effective is in two ways. You could scalp, but you could also participate in much bigger moves in this type of an environment. And that's what I've done, is I've built a template. We're not going to use this type of a bar type for this system. I'm going to just use these exotic bar types. And what I did was I built a template, and I'll give you an example. Now, like I said, this is just me preparing example templates. By all means, it's not the end all be all for every system. Like I said, all these are just example templates that I can give you and you can use. But I tested this month, 3 weeks. 1, 2, 3. We're still in the 4th week. And ultimately, I came back with a pretty decent run rate. Like it was pretty decent. You can see there's some losing days in here, not too crazy, but the last couple of weeks have been pretty decent in and of itself. And let me just kind of show you what this is. So let me just kind of go and show you how I set this up. I set this up to the way I look at reversals. Okay. There's two concepts. If you're going to trade a reversal, you technically normally put your stop above or below the reversal. Like that's just normally how reversal trading works, right? Like if you're going to trade a reversal to go this way and you're entering here, you're normally going to put your stop above like that's how normally reversal trading works. If you're trading a reversal and you put your stop so tight, you could do that. Like you could get short on that reversal and have your stop super low. But then what ends up happening is what happens if the market comes back to retest you before it rips. And that's the difference between a scalper versus a bigger stop reversal trader. Like it's not right or wrong, but you have to understand the risks that are apparent to you. Because if I look at this chart here for a second, if I entered here and I had a stop loss right real tight I would have got kicked out before anything happened. Right? Now, if I had a stop loss here that was really tight, I wouldn't have got kicked out on that one. So who's right or who's wrong? You're not. No one's right or wrong. It's understanding what you're comfortable with. By definition, as a reversal trader, what I normally would argue is that you want to have at least a big enough stop loss to encapsulate the majority of the reversal. Now, that's not necessarily going to appeal to the tight scalpers of the world, which is fine. But this is going to be very consistent with these large runs, because I could also take this template and I can tell you I could probably extract a lot larger amounts out of these runs. I could scale in this type of a system. What I've seen in these types of runs is you can ultimately get a lot more out of it, meaning you could probably set 2 targets. And what do I mean by that, right? Because in situations like these consolidations, you might have had a target in the middle here and got it out before, and then had another target up here. In situations like this, like on the big trends, you leave half the moves. And I see a lot of times, it just depends on if you're comfortable sitting through those big moves. But like in environments like this, and you take a look at this day, you had 2 back-to-back big moves on this day, because these are big trades. These are big reversals. Reversals tend to be big because true reversals are not the little pivots in the market. True reversals are true reversals. And these wick entries we'll talk about the wicks in a second, but I want to talk about the reversal setting first, because it's a really powerful concept just in and of itself on hybrid Renkos. It's not reversal trading on regular Renko and non-hybrid Renko settings is very blah. It's like there's nothing special about it. But in these types of situations, you could literally know that if you have a really good objective at this target, you could probably go for a 2-to-1 target on these big runs and go to break even at T1 and then trail, or just go to break even at T1, or trail your stop loss to T1 and then just leave it, right? Like you could do that, because I would argue that you could probably capture a lot larger runs on these really big moving days, right? And in situations like this, depending on how you set your targets up, like it went in your favor a fairly decent amount before pulling back. And, that's where I think you could probably set like multiple targets with this type of a system. Like in this example, we got along and it came here, but you could have easily moved to break even or trailed your stop to that, because if it's a big trend, it's going to just keep going. And you normally see that in really big trending markets. And like, take a look at this. You catch the reversal and like it's a trending day is a trending day. In a non-trending day, yeah, and that's the thing, MJ, is that's why you don't know that. And that's why I'm saying a true reversal is normally going to happen on big trends, because you're going to start the new trend on a reversal. And in these situations, like that's why I have an all-in, all-out scenario, but I'm just explaining different concepts of how this system could probably be improved. You'll drop your win rate, but you'll make a lot more money on these types of concepts, right? And so let's talk a little bit about the reason I set this up this way. First of all, what I look at is I look at a few different concepts on this. Is that when would I want to trade a reversal versus when would I want to use the wick? Well, sometimes you get the reversal and there is no wick, and sometimes there is a wick. And so you can actually take this concept of trading the reversal and merge it with the wicker. Okay, you can actually merge it with the wicker. Let me just give you an example of what that means. Let's find an example, a better example right here. If you just, in this situation, you get a wick right after. So if you run a reversal situation and a wicker trade, you're going to get a signal here and a signal here. and well, they're not really huge in terms of the concept of the bar size, John. And that's the, like, think about this. Like I'm telling it to reverse 200 ticks. I'm telling this to reverse, like, it's a 20 tick bar, and I'm telling it to reverse a 10x multiple. And I'm doing that on purpose because the system is very, very efficient with this type of a concept. But this is just a reversal. We haven't even talked about the wicker for a second. Like we haven't, like, let's kind of transition now, because this is the reversal side. This is a really strong concept for the reversal. But this system also does the wick entries. Now, the wick entries, let me explain what a wick entry is, or what we call the wicker. How many of you guys can see the wicks on that run? Like, it sticks out like a sore thumb with these one blips. And, you know, we don't, that's why I think having an EMA, a strong EMA is very important on those wickers, because reversals against those EMAs, I just don't like them, but we'll get into that in a second. But you can see these wicks. You can see these wicks, right? And you can't see those can't see that like that. Now you do get wicks in these little teeny moves, but you can't see that. And this is the difference between hybrid exotic bar types and why I just love the system so much. Like, this was today. This was today. And there was a reversal trade this morning right here. This was one big ass trade today. Right there. And then there was a wicker right there, depending on how you set it up. Or if you set it to be a bit bigger, you require a bigger wick, then you would have got your wicker there. Like, you can choose how big you want the wicks to be. John, this is a great example for me to teach you something. Our bar types are designed for us to control the reversal. They're a BXT bar type. They're a special bar type for exotic wicks, and it allows us to look inside true price action without masking that. And so basically you have a bar type. The bar size is actually 20 ticks. But what we're saying is we're not going to plot a new bar in the new direction until it reverses 200 ticks. So it's not going to actually show a down bar until it goes 201 ticks. So they're not actually bigger than the candle. They're doing exactly what they're supposed to do. Okay. And so that's why we always keep the bar size small, so that you can ultimately see the wicks inside of those large environments. Does that make sense? And we do that on purpose. It's designed that way on purpose, because what this is telling you is these are fake outs. These are pullbacks on smaller time frames when the market's likely to go in a much bigger direction the other side. And that's why we wait for such a large reversal to do so. Does that make sense? Now, I ran the offset is basically where the open of the bar is relative to the close of the prior bar. So basically, if I have the bar closes here, the offset is this line here, 17 ticks from the close. So when I have a 20 tick bar, the offset's going to be 17 ticks below the close of that bar. And it's called modified opens. These are technically, this is technically what Ninja sees as the open, which is why we have to have And so the concept here is that like our bars do what they're designed to do. Like these are specific types of bars for, and our algorithm doesn't care whether this open is modified or not because it goes internally and it fills you in the right spot. You could. Yeah, you could. You could, Peter. You wouldn't be able to do that on the wicker though, because you wouldn't know when the wicker is going to happen. You do that on the reversals, yes. Yeah. So let's kind of just go back now for a second, and I really want to just talk a little bit about like what this is, okay? Because you're gonna have different size wicks, right? And you might have tons of wicks in one direction. So let's go into the wicker. Now this is only 40 trades, right? I only went back. Okay, I just didn't have enough time to test. Like it takes hours for me to run all these optimizations on all these different systems to test. So I went back 2 weeks. So I just want to see over the last 2 weeks, what was the results of the wicker. And ultimately, we can go in here and we can see that, like, let's just go to the chart for a second. Now, I'm just showing you these as examples, but I'm going to actually run an optimization with you right now. And we're going to talk about it. Okay. Now you're going to see here, to me, like I have this set to a really big wick. I have this set to minimum wick size 100 ticks. So if I look at, and this is in the overnight, so I wouldn't have taken a trade there. But like, if I was taking a trade during the overnight session, right, then I would be taking this. This may not have been an entry, but this may have been an entry short, right? This would not be an entry, but this would have been an entry. You see that? Big wicks. So let's do this for a second. Let's just show you an example of like how you could build an optimization, because these are templates. I'll give you these. These are good templates. They're successful. They work. They're very consistent. This is a high win rate. So this is a 2-to-1 R multiple. So this is basically what's interesting about this template is I did it in a way where it's actually a tighter stop with a bigger target. And I did that on purpose because what it's telling me is that like I was taking a risk at getting kicked out. Take a look. I risk getting kicked out with a tight stop, but the difference between scalping versus big R multiples is that you can really capture big wins on the right side of these trades and the wick trades. But if you have too tight of a stop, you can get wicked out quickly, right? And so let's kind of walk through doing an optimization on the wicker. Would you guys like to do that? Let's walk through building one out from scratch. Give me a yes that you guys would like to do that. I want to show you how I would go about doing this and teach you this, and we can do that together. Okay. So the first thing we're going to do is we're going to set the algorithm to an optimization. And we're going to go in here to the ARC hybrid algo. Okay. Now, like I said, this is a hybrid algo. There's 4, you see the strategy parameters? Remember in the engine, there's 4 strategy parameters here. There's 4 signals, 4 different systems in this algorithm. I'm only going to just talk about the wick for now. So we're just going to look at the wicker. Okay. So I can go in here and I can turn this off. Okay. Go in here, leave that one on. Give it a second. So now I'm only running tests on the wicker. Okay. Interesting. Thank you, sir. False, false. We're going to take this off. I'm going to show you here. False, true, false, false. For some reason, every time Ninja does that, I need to reset it. So we're gonna go. Let's just work from this one, and I'll show you, because Ninja does that sometimes. I need to restart the computer. So let's go in here. You see the strategy parameters? I have it set to an optimization. Let's go this and let's run new strategy analyzer. Sometimes for whatever reason, like Ninja does some weird things on their strategy analyzer where it's like you set a setting and it doesn't populate, and then you open up again and it populates. So I'll show you. Okay, see all these extra parameters in here? That's a strategy analyzer bug that Ninja has every time. You just sometimes you just need to restart Ninja and it just fixes. But if you have a template saved, it'll override it. So look at reverse signal false, wick signal true. Okay. See these settings? When you hit true, they're supposed to appear. Okay. And that's the settings. So we're gonna go in here. Take a look at the settings that are involved in the wicker. And this is where I really want to make sure you understand this, because it can be very powerful to you once you understand it. And really, really powerful. I'm going to look at this chart on the left. Let's just move this out of the way so that we can see things. Just like this. I want you to see the chart left and right of the testing template, just so we can do this. Okay. So we're going to look for true. So max wick entries per reversal. So this is something that is a choice. Like you can take one trade per trend or multiple trades per trend. So what would be the difference? Well, let's take a look here and I'll show you. So if I'm looking at this chart here for a second, if I only chose one wicker trade per direction, then I'm only going to take the first wick that meets my criteria, and I'm not going to take any of these other trades. Okay. So what this tells you is that you can optimize for how many trades in one direction you want to take, and it's going to go back and it's going to look at all the large trends in the market and see how many times did you get lots of big wicks. So if you want the first trade, you could optimize for just the first trade, right? Or you could optimize for multiple trades. So minimum 1, maximum 3, maybe 3 big trades per trend. You could do that. Or 2. Maybe you want to take 2 trades per direction. That's fine. And max bars to wick signal. So what this tells me is that after a certain amount of bars, I'm going to stop taking trades. So let's say, like if you set the max bars, like let's say 100, maybe it just stops you right there. Well, you wouldn't take that trade right there if you had that setting. That wick would be a block trade because you've got 100 bars here printed, and it's basically just saying that, right? So I'm just letting you know what these settings do so you understand how this engine is designed to basically build and test. So like max bars, like if you don't want a max bars, you can just set this to like 10,000, right? If you wanted to, and like you don't, you can just, there is no max bars, like as long as it gives you the criteria. right? And you can do that. Now, from a ticks perspective, signal wick base, always on ticks. I'm always going to set my signal based on ticks, my preference. And then I'm going to choose what's the minimum wick size? Like this is telling me, am I going to measure the wicks in ticks, right? Or average range? Well, since I'm using a Renko, I'm going to use ticks. So what I'm going to do is I'm going to say, okay, since I'm checking for ticks, how big of a wick do I need? And what is my minimum wick size? Well, I've seen some really good results with only really big wicks. And then I've also seen really good results with allowing the first little teeny wicks. And I'll show you what I mean by that. Like right there. Like that's a retest of the floor. This is a great example of trend, pullback, break of structure, trade down, retest, hit the ceiling, trade back down. That's exactly what this story tells you. You need to understand it. Let me draw a little line in the sand. That's a level of support. What do you think those wicks are testing? They're testing levels of support. That's exactly what those wicks are doing. Those are in a smaller time frame, market structure. But we're removing that noise because it's easier to see the market data from this type of a bar type than it is getting their pigeonholed into these really, really weird wicks and movements. Okay. So what I'm going to do is I'm going to allow small wicks. And because the other template that I built is only for big wicks, and I want to show you the difference, and we can optimize. So let's do this. Minimum wick size, right? I'm just going to leave a minimum, and we can set this up of like, let's just use a discretion. Like if we know that the bar is 20, so maybe we could use a 20 tick minimum, like 2 times the bar size. Like maybe it's like it needs to be a 20 tick wick minimum, which is like that. Might be a minimum wick size of 20 ticks. And you might say, okay, we're going to do a minimum wick of like, say, 40 ticks. Well, 40 ticks would be, let's just measure it. That's 40 ticks, right? So let's just do 40 ticks for an example. Let's just use 40 ticks as a minimum wick. And Jeff, you still here?
Yeah, I'm here.
If I set the maximum to 40, then it'll just be 40, correct? And a minimum of 40 all across. There's no maximum, correct?
Yeah, so I'm just looking. Yeah, you just do the same.
So
well, I'm sorry, I didn't catch the first part of what you're saying. So what are you
if
trying
I
to
just
figure out?
minimum 40, but no maximum, I don't want a maximum. If I want minimum wick size 40 ticks, but I don't want a maximum, it can be 100 ticks if it wants to, but it has to be minimum 40.
Well, you have to put a maximum number.
Exactly.
Otherwise, it won't search over that range.
I don't want it to search. I just want it to be minimum 40.
Oh, then 40 and 40. Yeah,
exactly.
40. Right.
Exactly. Yeah, I don't want it to optimize the wick size. I just want it to take trades based off 40 size wicks.
Yep,
you can optimize wick size. You can optimize the wick size, or you can just say take any wick that's bigger than 40. Does that make sense? I'm just using this as an example to keep testing very, very quick and very fast. Okay. And let's go down. So quantity, I'll just leave it at 10 for a second. I'm on micros, and let's just go here. So quantity 10. You see here, limit pre-order gap bars. Okay. Max pre-order gap bars. So that's 10. This is basically that slippage thing, right, Jeff?
That's the one that was missing on the other algo.
Exactly. Yeah.
Yeah,
so I have it set to 10. So I have it set to 10. So basically what that means is, let's say this gave me a signal here, and then for whatever reason I had the same timestamp, it'll fire the signal up to a maximum of 10 bars. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You say, well, that's too many bars. I don't want to lose out on that much movement on my market. So I might move this down to 5. So I'm only going to take the trade if it allows me to get in 5 ticks, which is 5, it's 5 really. So, and that's just, you can choose that. It basically means that if you get a big flood of orders coming in, and you get 2 or 3 bars coming in on the same timestamp, you're only going to take the trade as long as it up to a maximum of 5 bars. If it's too much, then it's just too much slippage, and that's a safety measurement. It's bars, but since each bar updates with every new tick and every new distance, then it's essentially the same thing here, Eric, in this situation. Yeah. It needs to move 1 tick in this direction to create a new bar. Yeah. So then essentially, let's talk about stop losses. Well, this is where we can do the optimization, right? We can do the optimization on stop losses by understanding, well, how do I want to run my algorithm? Do I want to run it with really tight stops? Or do I want to not get the risk of getting high ticked, right? Like in a situation like this, if I got filled on this, or if I had a, let's go back here. Great example here. You got the reversal and then the retest on the next bar. Well, if you have it too tight of a stop, you're getting crushed here, but you may not have that problem here. So this is where I would optimize the stops and targets. So by bare minimum, okay, if my I could go as minimum, I could go as little as the bar size. Like, this is what makes this so fancy, and this is what makes this so fun, is that I can get as creative as I want by basically saying, okay, if I'm going to enter here, that's my entry, because I had a 40 tick wick, right? That's my signal bar. What this tells me is that I get an entry. Bare minimum, I could put my stop maybe above the bar size, give myself a little bit of breathing room, which is 22 ticks. And I could go as big as the reversal, because I could have a wick that goes 199 ticks before it reverses. So I would go 22 ticks all the way to 202 ticks. Make sense? That's one way you could do that. You could optimize stops, and that's why I did it. I did 20 ticks to 200. And I did in increments of 20. You could do it in increments of 10. And then I said, okay, I'm going to optimize my stops and targets. So let's go down here. I'm not optimizing trails and break even, but I could optimize my targets, and I could say I'm going to go for a 1-to-1 on all trades. Minimum 20 ticks, which is not 20 ticks is 20 ticks. You know, if I go 20 ticks, let's take a look at how big a 20 tick move is. That's 48. So 20 ticks is a scalp, right? That's 20 ticks right there. So I could go that's a 20 tick move right there. Okay, perfect. So then I know I could go all the way down here to 200. I could optimize big R multiples, right? So I'll just leave it at that. Make sense? So I'm just using the same framework, and it can be a 1-to-1 all the way up to the maximum size. Now, we could basically remove this and basically saying ignore trade times, which means I don't care if it reverses in the overnight. I could totally do that. And I could basically just ignore the trade time. And in this regard, just to show you an example, I've never tested it outside of the US session, but I know traders that trade in the European session. And et cetera, right? So let's do that. We'll ignore the trade time. And we're not going to do money management testing now, because we always do that last. I'm not going to use an EMA in this regard, because for the sake, I just want to keep it fast for testing. I'm not going to use momentum. I'm not going to use anything. I'm just going to use wicks to test the wicks. You could use an EMA. You could definitely use an EMA. And when would an EMA help you? When would an EMA help you in situations? On the wicker signal, only if it gave you a wick on, say, something like this bar here. And if you had an EMA and it's like that, you wouldn't go short here, right? But you have to have a big enough EMA to encapsulate, like these blips. You see this blip like this, like you have no control over that, because sometimes the market might move 200 ticks, close, and then it just rips. If you had it set to 202, you wouldn't see that bar, right? You don't know that. So this is where, you could use an EMA. And the only time it's really going to help you is in these, but that's only for reversals. Like I think the wicker is not as at risk as the reversals are for that, because the wicks happen after the reversal. So that's where I like the wicker. Let's go down here. MNQ. Okay, testing that. And let's just go back and test like a couple days. Like, I don't know how many days is testing in here, but let's go. I don't even know if this is going to show profitability or not. Like, I haven't tested this template whatsoever, but this is the fun of testing. This is the fun of optimization. It gives you the foundation you need to look at, right? And I'm going to optimize max profit factor, blah, blah, blah. And let's just save this template as Algo Week Demo Wicker. Okay, and yeah, let's take a look at how many iterations that's going to give us. So let's try it. 300 iterations. Let's take a look at how much that is. There is no starting time, MJ, on this. I just said ignore trade time because I wanted to take trades in the overnight and during the regular time. Yeah. So like 17 there, it's going pretty quick. So how many of you guys learned more about the wicker now, knowing what I was just explaining? Okay. You guys, like, I love the wicker. I just think it needs a little bit of time to understand the power of it. I think that here's my thoughts on the wicker. Since it's a reversal system, there was trades on the hybrid. Maybe you just don't have it set up properly today, MJ. Yeah, there was definitely trades on the hybrid. Yeah. There was trades this morning on the hybrid. There was one reversal long, one reversal short, depending on if you had an EMA filter or not. So this is 8:30 Eastern right here. This is the US time. So this is 5 o'clock is 8 o'clock in the Eastern time. So that's pre-market. There was a reversal short here, which depending on if you had an EMA, you may or may not have taken that. There was a reversal long there. And then there was a shit ton of wicker trades all the way up that run. There, and if it's not taking trades, MJ, I can promise you this, it's probably because it's set up wrong template, wrong stops and targets, or we just need to get on your computer and help you out, my friend. Yeah, that's what we're here for. And we will do that. We will do that. Okay. And it just had a reversal short here. I mean, we're going into the close, but you can see here that you know, this just gave a reversal, and then it just gave a wicker, and it's already done. Like, we're at market close now. Markets are closed. It'll open here in another, yeah. Yeah. No problem, MJ. And the reason here's how I would do the wicker. And this is like my experience talking. I would run the wicker on crude oil, on gold, on the NASDAQ, the euro. I would set it up on one index, on one metal, on one energy, and one currency. I would run it on 4 markets. Why? Because it's such a unique concept that you could run it. How do we know how to set it up? Isn't that why we got the fractal converter? Let's go into this bad boy. Let's think about this for a second. Okay. If I'm using half of that bar size and then I'm going 10x, well, I could probably do 10. Maybe if I'm going to do gold, I could do 5. Let's run it. Let's pull up a test example of gold. And I'll show you what I would do on this. Like I would we can do micros or just do random. Let's just do gold for a second. I'll show you this. And let's just run this. And I'm going to let's just take the bar size. You could take half. It's already 5 ticks already. So there's nothing much smaller than that. So like, let's just do 5 ticks. And let's just do a 50 tick reversal and 17 into 20. Let me just double check that. 17 divided by 20 is 85%. So 5 times 0.8 is 4. Let's just run that as a 4 tick offset. Let's just take a look at that, what that looks like. Now, why would I do this? I would like because you look at gold for a second. Like, you could be trading a wicker signal on the NASDAQ and be completely trading a different wicker signal on gold. And because you're trading exotic bar types, you're not exposed to the little teeny chop and slop that's going on where most day traders are getting their asses handed to them. The wicker removes the chop. The wicker gets you out of the noise. When you understand that, I love this system. The VD algo is amazing when you apply it with the right volume cluster size, right? The wicker you could apply to any market as long as you set the bar type up, right? Like this. I would literally run it like this and optimize the wicker signals, because take a look, like you had today, this market was badass today. Like at 550, there wasn't any wicks on these candles. You see how small these wicks are? But if you had maybe a bigger wick setting set in here, you could take a look, like wicker, 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 wicker. Like, and they're good trades. Like, they're very, very, very good trades. And I would set this up, if I take a look at gold like this, okay? You got the NASDAQ like that. Because you're not in market noise. You don't have to sit there and be like, what's the market doing? Am I trending? Am I going to have a divergence? No. Because the wicker's not designed for that. It's designed to remove all that headache and test like that. So let me just show you what crude oil would look like. I would run it on an index, an energy, and a metal, and have it on 3 different accounts with some trade copiers running, because I can tell you right now, if I take this and put this on crude oil, what's the fractal on crude? Fractal on crude is 10, right? So I could do that. I could probably put it at, say, 10 and put a 100 tick reversal on crude oil and put it as a 9 tick offset. Too big on crude. Maybe, or maybe we just didn't have any movement on crude today. Did crude move at all today? I don't know if I have data downloaded. Maybe this is, or if I'm on the right contract. Crude maybe didn't move at all today. Maybe it just stayed tight in a very, very, very small range today. Could have, no movement on crude. It was flat. There it is, right? Take a look at how clean those wick trades are on crude oil. Like, you can see them, right? You can see them. You can see the wicks in these markets a whole lot better than you can in any other system that I've ever built. And that's saying a lot, right? Like, that's a pretty important thing to understand. So I got 36 seconds left here. Give it a second. So how many of you guys can see the potential in understanding those wicks in those exotic bar types? Like, this is like, and understanding how to change the volume clusters in the VD algo to optimize bigger volumes, and understanding how to leverage the VD algo properly. Yesterday, we talked about the trend stepper and the VWAPer. The VWAPer will always happen. It never changes. It's VWAP, and trend and momentum will always move. That's the power of it. Give it a sec here, guys. We're almost done. Remember, I just want to show you how to build these optimizations out. And no shit. Let's take a look at it. Pretty good information. It's too small for me to get excited about or even to want to trust it yet. But let me explain a few things. How do we know we have something worth merit? Because it's showing that it's working in a very small period of time. And therefore, what we need to do, very shortly, Mark. Yeah, we're coming to an end here because my brain is shutting down, getting a bit foggy. But like, let's take a look at this for a second. See how the profit factor is coming from top to bottom? That's why I'm sorting by profit factor, which is performance. This was the best one. I had pretty large return for a very small drawdown with a very high win rate. Very high win rate. What's really interesting about this is I've got such a high profit with such a high win rate. That you don't really see that, because normally with a very high win rate, you have smaller profits. That to me is very interesting to look deeper at, because when I have a high win rate by nature, I'm already assuming it's a scalping outcome from the optimizer. But when I have a really big profit like that, like let me sort by profit. Wow, man, like that blew me away. Let's take a look. Those are the last 4 days testing these settings on the wicker on the NQ. Okay, so let's now this is where in the inexperience you're gonna be like, holy shit, I want this. Wait a second, tone that emotion. Let's go in here and let's go take a look at the chart. I just want to see what it's doing. Okay, I want to see what it's doing. So it's taking small wicks. It's allowing small wicks to happen. That's what it's doing. It's allowing the small wicks to happen. And it's telling me to take the first trade. It's telling me that I just take the first trade. See how this optimizer says how many trade signals in one direction. Take the first trade in the direction with a small wick and have a fairly big stop and target, because it's giving room to not get high ticked. And that's what that's telling me. Now that may work now, but we need to see, okay, we need to see how would that work? How would that work in the past? We don't know. But it's enough for me to want to test further, because that's a really good statistic. In 4 days, it's enough for me to want to test 2 weeks on that. So that allows me to take this template and run it. So what can I do? I can basically, here's how I would do this right out the gates. I wouldn't touch the stops and targets. I know right now it's telling me, let's just go down a little bit for a second. Let me sort by profit factor. Okay, there's a really good one here. This is 1 wick entry. So this is telling me 1, and this is telling me probably had 1 a little bit more of a loss. Yeah, that bracket is telling me the outcome setting. So this is telling me right here that that's the chosen fractal. This is the chosen fractal. This is the chosen, like this is basically what that output is telling me. And so when I do this, you can see here it says stop loss. It's telling me that this setting is set to a 200 stop loss. That's the optimized setting. So what I'll do is I'll just show you an example. What I would do is I would sort by profit factor, and I would basically take here and I would look at, okay, so first of all, I just want to double check. It's telling me to let me just double check here. So 1 wick per entry, 1 wick, 1 wick, 1 wick, 1. It's telling me no more than 1 trade per direction. So let me just take that now, and let me just change my optimized setting down. I'll show you what I would do here to make this faster. And this is how you really speed it up a little bit. Now all you're doing is testing stops and targets, and you increase your look back to another week. I'm really just optimizing way less data. And let's try another week. It should come back fairly quick because it's not a lot of optimizations. So after you optimize, how do you? I write the key settings down, Ben, because if you change the toggle from backtest optimization, it might not save the right settings. It might save whatever was cached. So I write it down. I have sticky notes all over my freaking desk. Yeah, I like to, or I take a screenshot. Yeah, I have a Snagit on my computer. I take a screenshot. Make sense? So there it is. It's picking up. So it could be less than, I'd like to see what this turns out for the next week, because we might have just discovered an amazing template that we built together, and you know what I mean? Like, you can run with it tomorrow, right? So while this is running, guys, I'm going to ask a poll here. I just want to, I have a couple questions here. I'm just going to write a poll down. So I just want to know, from a, well, you need to download the data outside market hours. So now would be a good time to download that data. If you want to download today's data, you need to download your data outside of market hours. Kinetic doesn't allow you to do so, or the servers don't allow you to do so. So what I want to do is I want to launch a poll, guys. I'd really like some feedback on, what, if you found this to be informative, if you learned from it, if you understood from it, if now you'd need to go and watch yesterday's training, okay? And I'd love feedback if you could write comments in the Discord, and I'd love some feedback. If you would write a review on the Trustpilot, maybe Jim, you could put the Trustpilot link, or Jeff, you could put the Trustpilot link in here and just maybe give some feedback on some of our training. If you could, that would be really well received by me, because it always helps me understand, what we can do to improve on it. I'd love feedback on what you would like for additional training. We'd love for us to be able to, I'd love to know if you could just tell us some concepts that you need help with. I know you guys want help on engine training, you want help on optimization. I know you want help on these types of things. So, just maybe write a list of all the things that you would really love for us to kind of build our next boot camp on. And, these types of things are really, really well. For those of you that got a lot out of this, thank you. At least I don't have any one person said that it's absolute shit, which is great. We are definitely going to be putting together more training, guys. It just takes time, and the reason why it takes more time with algos than others is because algos take time to run these tests, right? Whereas you just use an indicator, then you can just you can basically you can just run the indicator, right? But if you ultimately yeah, so there's some great feedback. We got some great feedback coming in here. Kevin saying he needs better training on installation. That's really great feedback. Thank you. We normally take what you guys tell us, and we really do implement those trainings. Like we needed help more on beta testing, so we brought in more QA testers. We actually expanded on our staff, and we get help on, hey, bugs. So we have people reporting bug fixes. Like we're a big team, but we're also growing, and we always want to help everybody. And as we grow as a customer base, we also have to realize that also has a lot more pressure on us to make sure we can deliver. So if you tell us, hey, we need help on the engine, which everybody told me they did, then clearly we're going to put training together. We obviously know now that a lot of people need help on optimization, how to set up optimizers properly. And that's a great segue to Algo Week Part 2, right? These are things that we can definitely do. So just write them in the Discord, and yeah, we're gonna actually do that, Steve. So one of the comments earlier today was, can we break out the Discord into multiple threads per algo? And I think yes, not per indicator, because that's just insane, but algos, yes, because each algo is a different system and it requires different concepts to talk about and different feedback. So it's in motion. In fact, that was already put towards our team. I think it's a great idea, and we'll add that. So in the Discord channel, what'll end up happening is there's going to be a thread for each algo, so everybody can communicate on each algo. Yeah. It'll allow us to segue the community into different concepts, different testing, different feedback. Yeah. Makes sense. And it's a little less noisy. Yeah. So I'm going to end the poll, guys. I'm going to share the poll with everybody so that everybody can tell me. We got about 60% people answered. So there it is. So you guys can see the feedback. So it's great feedback, right? It's really great, right? Thank you for sharing that. So here's what's really neat, right? We just expanded the testing to another week. So this is what's really interesting, is that we've just expanded that testing to another week. We've now extended the trade sample size up to 30 trades, and we're still seeing a really solid profit factor over a week to almost 2 weeks of data, which is pretty good. It's a pretty good foundation to know that, you know, like, we don't get worried because we had a little bit of pullback in here. We don't know what happened the day before that, right? We don't know. We had little teeny tiny losses there, but we don't really know that yet. So what we can do is we can extend it to another week, right? And we can see here, you know, it might be just, if we take a look at the analysis, we can go to time of day. And we can see here that clearly all the losses happened at midnight. Well, nobody's trading at that time. So maybe we run this just European and US session, because that's what the data is telling us. That's what the data is telling us. The data is telling us at 1 o'clock, that's the European Open, my time. So maybe we just run it from the European Open all the way to the close, right? And then that would cut out those drawdowns, because it's not really, nobody's trading at that time. Does that make sense? Take a look at the time. You can see that time here. Like, nobody's trading at 12. That's actually the European Open. That's the US, that's the European Open. And there was 4 trades that happened over the last 2 weeks at that time. And that's enough for us to tell us that, hey, just don't trade the European Open, right? But that doesn't mean you got to cut out time. Like, if you were sitting here saying, oh, I'm going to cut out that time, and we're going to cut out that time, we're going to cut out that time, that's the pure definition of self-sabotage, because that's curve fitting on steroids times 100. Right? That's not looking for past statistics. That's trying to build the best printout. You don't cut stuff out like that. That's only doing yourself a harm. Okay. So I'll leave this template as well. I'm going to template. This is the save, and this is Algo Week demo Wicker live event. Okay. And I will add that to the folder for everybody. And I'll give that to Jeff and Ben. So what I'm going to do, we have a very special opportunity. We've been saving this for some time. All the templates that I spent the last weeks building, you can have it. Take a screenshot of that. That's important. And the 3 big things I wanted to cover today was we have the new VD algo templates, which are really, really great on the NQ. I'm really excited to deliver that and give that to you guys, because I know a lot of people were wondering, hey, I want to help on the ES algo. I think the S&P algo can be tweaked with maybe a different cluster size and maybe a slightly different bar size. The reason the NQ is probably going to give you better results ongoing than the ES is because it gives you more follow through. It's a faster push market. The S&P pushes, but it's not as fast as the Russell or the NQ. And so volume divergence tends to work better on maybe the Russell or the NQ. And so I would run with the NQ template. I think it's probably going to give you a better bang for your buck. The Wicker templates, I just love them. I think they're just such a sexy system. And this we've been saving. We've been saving this for some time. We know that some of you have already bought some algos. Some of you have no algos. Maybe you own one, maybe you own all of them. If anybody in here has bought every single algo from us already, send us a courtesy email and we'll send you a coupon. Okay. We'll send you a coupon. Okay. And we'll hook you up with a special deal. What we're going to do, okay, is I'm going to show you what we've been putting together. And this is a special. This is only happening for Algo Week, guys. This is not happening ever in normal webinars, in promo deals, in email blowout sales, nothing. This is literally just for Algo Week because we want it to be unified for all of the training and all the videos that we've been doing in the last couple of days. So what I'm going to do is I'm going to give you the link. Ashley can post it here. Let me just double check where it is. And let's take a look here. There it is. I believe it's. So what we're doing here is we're doing a blowout deal. We're going to give you all of our algos for the price of one. So if you own one, you get the other ones. If you own two, you get the other ones. There's no swaps. There's no backdoor differences. It's just our way of giving you as much value as we can under the hood. We didn't even cover the Delta algo and we're throwing it in there. Okay. If you've bought every algo from us and you already own all that, then send us an email and we'll give you a deal. We'll give you a coupon on future purchases. We'll hook you up. Right. If you already own everything and there's nothing to buy, then send us an email and we'll set you up. We've got yesterday's video from yesterday's training here. And we're going to post today's here. And you'll get access to all this training. Okay. So all the automated systems, everything. Okay. It's a blowout steal of a deal, guys. I think it's the best thing that's ever happened in the algo community, in our industry. I haven't seen too many other, not these types of algos. I know there's other programs and products out there that have a lot of algos for sale, but they're not designed the way these are, and they're not built for prop trading, and they're definitely not built for custom tick charts and intraday trading. And a lot of businesses are selling time charts and 30-minute time frames and stuff like that, and they're good, but they're not meant for prop trading. They're not meant. Maybe that's a typo, Ashley. Is it 749 or is it 795? I don't know. There's two. We're talking about arbitrage. Probably a typo. People working at night, guys. Sorry, it's probably been a late night for my guys. It's whatever the order form says. This is just a typo. The order form is the end all be all. So whatever the order form says is the golden goose. Yeah. We really work hard here to get everything out the door for you in a timely manner, but this has got everything in it under the hood. So everything comes with user documentation, video training. All the videos for today is going to be all recorded for you to have access to. We're going to send you an email with all the recordings and then all the templates. You'll get access to all the templates that I just built and spent time testing and providing for you. So, it costs the same. Yeah. If you own one or two, then you just get the rest for that price. It's an all-in-one sale. Our system's not designed to be mixing and matching and, taking out and all that stuff. If you own an algo or two, then it's just a value-added opportunity for you to get the rest, right? Because each of these algos are a lot more than what that is, right? If you already own any of the algos, do not remove them from the checkout cart. Simply complete the order form as is, because the thing is that, you don't, if you already own them, it doesn't matter. It's just the order form needs to be that way. Okay. Just it's the way our purchasing. And if you need help installation or anything of that nature, then We got your back. We can take care of it. Just send us an email and we'll jump on your computer. Okay. So I'm going to run a poll, guys, because one of the things that we asked here was feedback. And one of the feedback things that you guys said was help with installation. Well, in order for us to help with installation, I need to let my team know what to expect. What to expect on this. So let me just do this. I'm going to just run this here for a second. Give me a second here. I need to know this so you can tell me. It's a simple yes. It ends now, Kevin. So it's over. It's ending now. So let me run this. I just need to know, are you purchasing or not? And why am I asking that? Because we do need to help with support and installation, and we do need to be able to provide that. I can't have an entire team on standby if you don't tell me if you're actually doing it or you're in it to win it. And the reason I'm asking you to just be 100% straight with us is because the number one thing with Algos is everybody's asking for help. Everyone's asking for onboarding and assistance and these types of things. And so if we're going to truly help you and we're going to truly get your templates up and running and truly be a support system, and I need to let my team know, hey, I need you to stay late. I need you to put in a few extra hours on the support because we're doing a huge wave of influx and a lot of users are going to want that help. And so it's just a common courtesy request, guys. It's just, I need to know if you're on it and if you're in it to win it, because yes, you don't need to buy right today at this minute. Like, I would really like you to go in and watch these videos, right? But you're going to have a day or two here to get on board and do this. And you just buy the order form. If you already own one algo, just purchase the order form. Don't remove anything from the order form. Just purchase it, and you're going to get all of them. It's just a 5-in-1 checkout. You're not getting charged for more of them. It's just a bundle package. Yeah. And it's a one-time purchase, Mark. Yes. The bugs and stuff are part of it. We ultimately fix bugs ongoing. It's part of our business mandate. And so don't worry about not having to have that. Yeah. So can you give a drop dead time when it ends? Yeah, it ends on the 30th. Yeah, it ends the 30th. Yeah, Stephen. It ends on Sunday. Yeah. So if you could do me a favor, guys, and just fill that out. I've got 36% of you have answered this. If you're looking at the screen, or if you're on another window, or if you're on, just do me a favor and answer this yes or no question. Are you buying this or not? I need to know, because I'm going to allocate more people of my team to stay around with support and answer emails and help you. It's really important to me because the user onboarding experience is important, right? You guys have all said, I want help with user onboarding and help. I need to tell my team, hey, can you do this? Right? Happy wife, happy life, Steve. Take her out for dinner and a movie. No, guys, listen, I really enjoyed being here. I love it. I love helping, and I hope you guys can sense that experience there. Did I do a good job? Did you guys learn something from me? Thanks. Appreciate it. You just need a good standard computer. Whoa. There's no credits, JR. Yeah, there's no credits. What we've done is if someone's purchased like all of them already, then we can give you a coupon in our store. And we understand that we can't please everybody. It's impossible. It's impossible. We know we can't please everybody. Like it's like when you go to the grocery store and you buy steaks, and sometimes you get an amazing deal. You're like, shit, I wish I would have had a barbecue that weekend, right? Like as a business, we have so many clients all over. It's hard to please everybody all the time. And the best we can do is give you a store credit. If you've purchased a shit ton of these already, you've already own all of them, right? And you're like, hey, I should have waited. Then just shoot us an email. Like, we're humans here. We understand our job is to help serve as well. right? But we can do our best to help as many people as possible. Which of the algos include the wicker? It's the hybrid. The hybrid is the wicker, Stephen. Yeah. Hey, Rob. Yeah. The recording's on the page. So the link, Ashley, if you Ashley just put the link in here, the recording's on this page. This video is yesterday's recording, Algo Trading. It's this. Yeah. And I have one last surprise for everybody. I have one last surprise for everybody, but I can't talk about it today because it's not ready. So I assure you, when it's ready, I'm going to post it in the Discord. It's just, we've been working on a whole lot of things that have been just coming to final completion on development. And I think a lot of you guys are just going to love some of the innovation that we've got coming this year. That we've got some really exciting stuff that's never been built before and it's never been released. And I can't wait to share it with everybody. And part of our business is R&D and development, right? So we build new concepts. A lot of them come to market. Some of them never get to market because they're shit. And they just were like, well, no, we can't make money with that. We can't use that. But there's a lot of other great tools that we're putting out, and I just can't wait to share with you this year's development schedule and what's going on. And the next Algo week is going to be fantastic, like order flow and volatility algos, and like it's just wicked stuff coming. That's breakout algos and just some wicked things that are just amazing. So just stay tuned and join the Discord. And if you haven't got in there, then get in there, right? So thank you guys for your participation. Really appreciate it. Really glad to have you guys here. I know our team and I are just ecstatic to have so many people in the Algo community. And if you could do me a favor, leave some comments on the Trustpilot on our weekend and in our Discord, and any feedback, shoot us an email. We'd love to help. Take care, guys. Hope you
Sean,
enjoy.
we're going to start calling you Marathon Man.
Yeah, man, it's good coffee. Yeah, it's good coffee. Yeah. I get exhausted after so much hours of talking, but got to be done, man. Yeah, got a lot of people wanting to use these things. Got to be done. Hey, Lars. Lars is having a problem with PayPal, Ashley. If anybody else is having a problem with PayPal, shoot us an email. Please, just if you're having a problem with PayPal, Ashley, put an email in here. Send her directly. Anybody... Yeah, Lars, Ashley, if Lars is here, we've tried to email you, Lars, but for whatever reason, you're not getting them. So I think you might have them spam blocked or whatnot. Maybe Ashley can send it to you personally. Or
yeah,
Jim
hey,
can...
Lars, I've been emailing you personally too. I'm not sure maybe if you're on Discord, if you want to ping me on Discord, because yeah, Jim and myself and Ben have all been trying to email you, but I don't think you're getting it. So see if you can get me on Discord or email me personally. I'll drop my personal email in the chat here too.
Yeah. If anybody's having a problem with PayPal, just send Ashley an email. She's the golden goose that lays the egg. Yeah, she's the Donna here. Yeah, some people have it, some people don't. Like Ben's using PayPal successfully. Some people have it, some people don't, right? So, all right, guys, time for a break. I'm signing off, and take care, traders. And I hope you enjoyed the Algo Week. We sure did.